declare open this hearing of the Parliamentary Joint Committee on Corporations and Financial Services into Small Business Insurance. I begin today by acknowledging the traditional owners of the land on which we meet and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee will be conducting today's hearing in person and via teleconference. These are public proceedings being audio streamed live via the Parliament's website, and a Hansard transcript is being made. I remind all witnesses that in giving evidence to the committee, they're protected by parliamentary privilege. It's unlawful for anyone to threaten or disadvantage a witness on account of evidence given to committee, and such action may be treated by the Senate as contempt. It's also a contempt to give false and misleading evidence. Witnesses also have a right to request to be heard in camera. If a witness objects to answering a question, they should state the ground upon which the objection is made, and the committee will determine whether it will insist on an answer having regard to the ground which is claimed. If the committee determines to insist on an answer, a witness may request that the answer be given in camera. I remind any committee members and witnesses who are appearing via teleconference to mute their microphones when they are not speaking. I now welcome the Small Business Development Corporation here in Perth, from where we are undertaking this inquiry at the Crown Plaza. I understand that information on parliamentary privilege and the protection of all witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names, the capacities in which you appear today?
Saj Abdullah Khan, Small Business Commissioner and CEO of the Small Business Development Corporation.
Martin Hasselbacher, Director of Policy and Advocacy, SBDC.
Corinne Brew, Executive Director, Small Business Development Corporation.
And for those of you who are listening, we have 4 senators here in the room. We'll shortly be joined by Ms Lawrence, and I understand we will have Senator De Liga joining us via teleconference as well from Tasmania, and Ms Jarrett from Queensland as well. I'll just give the opportunity for the colleagues in the room to introduce themselves, starting at my right.
Good morning, David Moncrief, Member for Hughes in Southern Sydney.
I'm Deborah O'Neill. I'm a Senator for New South Wales and Chair of this committee.
The Honourable Scott Buchholz, Federal Member for Cedar Right and Deputy Chair of the committee.
And Senator Porskar from the great state of Queensland.
We battle out about which is the greatest state quite frequently, as you can imagine. I now invite you to make a short opening statement, and at the conclusion of any remarks, I will invite members of the committee to ask questions.
Thank you. Good morning, and thank you, Chair and members of the committee, for the opportunity to appear today as part of this inquiry. As Small Business Commissioner for Western Australia, I welcome the committee's focus on small businesses and the issues many of them are facing with the insurance market. Small businesses have been impacted by the hardening of the insurance market, driven by global contraction in insurer risk appetite and heightened perceptions of sectorial risk. Access to insurance has become such a critical issue in Western Australia that it is reshaping the small business landscape, particularly in regional and remote areas of the state. By way of brief background, the Small Business Development Corporation, the SBDC, is an independent statutory authority of the Western Australian Government. Our role is to support and facilitate the growth of small businesses in the state, to provide education and advice, resolve dispute, and advocate for a fair operating environment for the sector. Western Australia has a thriving and diverse small business sector. Just over 257,000 small businesses operate across the state, representing 97% of all businesses. While most are non-employing sole traders, the remainder employ 541,000 Western Australian, 35% of the total private sector employment across the state's 1.55 million private sector jobs. According to our latest estimates, these hard-working individuals and workplaces contribute to $87.2 billion in industry value added annually, equivalent to 23% of the total industry value added across the WA economy. Geographically, 77.3% of WA small businesses are based in Perth metropolitan areas, with a remaining 22.3% in regional. By number of businesses, our largest sectors are construction, professional scientific technical services, rental, hiring, real estate, transport, postal, warehousing, and healthcare social assistance. By employment, the figure shifts slightly. Construction and professional services remain at the top, and retail, trade and accommodation enter the top 5, with healthcare a new entrant for us this year. In several sectors, small businesses is not just significant, it dominates. Small businesses account for 80% of all employment in agriculture, forestry and fishing, 65% in rental, hiring, real estate, 52% in other services. As you've already probably heard from my distinguished counterparts in our jurisdiction, small businesses face a unique set of challenges: limited internal expertise and resources, less bargaining and borrowing power, time constraints, wearing many hats, among others. These challenges warrant government taking a pause to reflect on the broader landscape small businesses operate, to ensure we are treated fairly and respectfully. I would like to highlight 4 key points relevant to this inquiry. Firstly, you probably heard that from other people who submitted to inquiry already. Firstly, affordability. Insurance premiums have been rising sharply and eating into small business margin, and this is not just anecdotal. CCIWA, who I understand will be talking to you this afternoon, in their latest business confidence survey, found 60% of WA businesses identified steep insurance premium as a top pressure, behind only wages and ahead of taxes and levies. This sits along national data from Vero's 2026 SME Insurance Index, which found 6 in 10 small businesses nationally reported premium increases in the past year. We are aware that many businesses are choosing not to claim on insurance due to a fear of rising premiums or becoming uninsurable in the future. Underinsurance is also a growing concern. We have seen from small businesses that they are deliberately reducing coverage or increasing their excesses just to afford their premiums. Others are unintentionally underinsured. A business may not realize it lacks coverage until a loss has occurred. Secondly, availability is the other issue for small businesses. Many small businesses, particularly in regional areas in certain sectors, simply cannot find an insurer willing to offer cover at any price. Western Australia's size and geography are important in this inequity. The state covers roughly a third of the Australian continent, and the terrain is as varied as the risks these businesses face. Cyclone-exposed regional and remote small businesses can face coverage that is unavailable, heavily restricted, or priced beyond commercial viability. We would also like to echo concerns raised by others in this inquiry about build back as before payouts model, limiting viability of regional businesses to rebuild more resilient infrastructure. The third point I would like to raise is literacy. Many small business owners lack the tools to fully understand what they are insured for and are exposed to a risk of underinsurance as a result. This means understanding what types of insurance a business needs, what it actually covers, and how to minimize their profile risks. This, again, is particularly challenging for small businesses from culturally and linguistically diverse backgrounds, and for many small business owners who are simply time poor. It is compounded for certain types of insurance that can seem less critical, such as cyber insurance, but which can have significant long-tail consequences. We understand over 50% of small businesses struggle to understand their policy terms and exclusion. The complexity reduces the ability of small businesses to question pricing, to change providers, or to negotiate better outcomes. Lastly, insurance is not optional for small businesses, yet its mandatory nature does not guarantee it is available or affordable. Core products such as public liability and workers' compensation are mandatory under workers' compensation and injury management legislation across Australia, and are often essential to operate, including for participation in government procurement. Small businesses are central to vibrant, thriving communities. They provide jobs, essential services, and support for local economies. In regional towns, regional towns are already grappling with higher rents, the added pressure of escalating insurance costs will likely force businesses to pass these costs on to consumers who are already struggling with cost of living pressures. The stark reality is that these rising overheads could become a driver of closure for small businesses, which turn risk disrupting services for residents and reducing employment opportunities in local market. I'm happy to leave it here and welcome any questions from the committee.
Thank you very much. Can I just check that all my colleagues have some questions? Yes? Okay. I might kick off with a couple. I note you've got, I think, 4 case studies here, all of them very instructive. If I could go to the first one, which is the small psychology practice. Often when we talk about businesses, people think about things in a material sense. So it might be a building company, for example, or it might be a physical act that's undertaken. But this sort of psychological space takes us into the professional sector, where there's a very different set of constraints that's not attached often to literacy, you would think. But literacy about psychology, even psychiatry or even medicine, might be very different from literacy about insurance products, places to get advice, points of resistance, what a broker does, etc. So there's probably 2 parts of what you've put on the record that I would like you to respond to. So using the example of the psychology practice, could you explain the problem here from a particular point of view and add on if that was in regional area? And then what does a literacy response look like that meets all these vastly different sectors? Who'd like to respond to that? Mr. Abdullah Khan or Mr. Hasselbacher?
You're going to start? I'll ask Martin to do it.
Mr. Hasselbacher then, yeah.
Yes.
Thank you.
First of all, the small psychology practice was in the Perth Metro region, so my understanding of that particular case is they had an existing contract with the state government. I believe it was with the police department, and then during the review of the common use arrangements, so that's like a panel sort of arrangement where government departments can go to relevant suppliers on that panel. The insurance settings were changed, and that was to recognise, I guess, the threat of cybersecurity as a real and present sort of danger for small businesses, or for any business, I guess. And the case highlighted that the setting by the government to increase the minimum cybersecurity setting ended up costing this business something that they could not afford.
Okay, so there's a couple of important things to tease out there. If you were a client at the psychology business, you would have to have them know that they're operating in a world where cyber threat is very, very real. What would your expectations as a client be for cybersecurity investment by that company?
I would expect that my details would be protected as well as possible.
That's right.
Yes.
So that precedes whatever government might determine to do. So this important dance between government and business and who carries what burden, etc., often we find that the government is pushing things forward that perhaps the sector might have already needed to undertake itself. But where is the information for such businesses about managing their cyber risk? And where is the product that is affordable? So if we can sort of move away from the government changes standards, we know why they changed them. What's the problem with accessing the product? What's the problem with renewal of business insurances and the interface between this business, which should have 3 years ago been getting informed about this and been offered a product that was affordable? Tell me about that. That's a literacy and access issue.
So I think if I may,
Mr. Abdullah Khan.
on this one is, when it comes to literacy, and you're talking about, again, when we talk about small businesses, there are a lot of different sectors, construction, but in this particular case, when there are professional associations around, I think there should be an expectation that these professional associations help with raising standards within the actual profession as well, to help them to raise literacy, because on its own, the small business owner is wearing so many hats. They won't be able to develop all these products by themselves. In certain sectors where there are professional associations, you would expect the professional associations to step in and help these these businesses. But
Mr. Abdullah Khan, are our expectations there, which I think are generally right, are they actually being met? Or have professional associations stepped away from the sort of thought leading that's necessary to keep up with modern threats to business and advocacy for products for those businesses at scale?
I think there's more to be done in that space, Senator. There's quite much more, I think, associations can do in that space. But what we have to also, I think that case study is, I think, is a very strong case where associations can do more to help their members. But there are sectors, a lot of other sectors, when we're talking about your cafe, your hospitality businesses and all that sort of stuff, where there are no associations. I mean CCI, there's a very big span of what we cover, but we're not specialist associations like you have like in construction, or you're looking at a vet and all that, where there are professional people. But as much as there are professional people, there's an expectation that they should be able to be literate enough. Yes, they are, but they are time poor as well. So you need, the association where they are needs to offer them more support so they can develop that. And it cannot be done in isolation, especially expecting a small business to be doing it on its own. There is no way we can do that. That's where I see a role for associations to step in and help them.
While you're having a look at that, colleagues, I'm sure will have questions as well. One of the assumptions would be that the Small Business Development Corporation or a business lobby group might be the peak body for such groups, but there is such difference across them. Do you have very clear communication lines with a range of professional bodies? Do they come to you and let you know about what their professions are doing? Like, is there any ecosystem where professional bodies talk to business development corporations such as yourselves? Or is everybody just relying on, a Google search to help them? Because it seems to me that's in a time poor environment.
Yep.
You're building a psychology business. You're not going to go for support for insurance to necessarily the psychology professional body, although there's a product gathering entity, if there ever was one, right? It might come to you. Or how do you know about what the products are there? So is there a way to think about creating a literacy ecosystem that makes everything a lot more transparent to businesses across a range of different industries, professions, to help small businesses find what they need at affordable prices? Ms. Brew.
Yes, look, I think that's it's a good point in terms of the business ecosystem and the need for education and resources to assist. That's something that we do at the Small Business Development Corporation, is we tend to spend a lot of time and effort putting out various resources. We have a number on insurance to assist. But I think sometimes the industry associations can focus on their subject matter space in terms of if you might have something in the health sector around health reforms or which are important policy questions. But I think sometimes the representation crosses all members from that sector, whether it's small, medium or large. The small businesses can have very different needs from the larger firms. And something that could assist is probably more focus on what the small businesses in each sector are needing. We provide it across the board, so we spend a lot of time with our education people trying to break things down, break government requirements down. We put out a lot of proactive information about insurance in this space, but I think that there could be more by associations to focus on their small business members who might be very different to their larger members in terms of their resourcing to really interpret and understand what's required.
Okay, well, thank you very much. Mr. Hasselbacher, yes?
Yes. Thanks, Senator. I think it's also important to recognise that many small businesses don't actually join any industry association.
Correct.
So I think then...
But they still have to get insurance.
They do. So I think, there's certainly a joint responsibility there from the insurance industry themselves in terms of educating potential clients. as well as a role for government agencies. So that's, as Corrine mentioned, SBDC tries to fill that role here in WA and provide curated information on our website. We run workshops where we do talk about insurance being an important prerequisite even before starting a business. So, and certainly like when you get into the space of employing staff or having clients come to your business premises, the importance of making sure that you're insured. So I think it's a joint responsibility across industry and government in that regard.
Can I thank you for your answers to my questions? There's more questions that emerge every single time I ask a question, but I want to acknowledge your 4 recommendations and the other scenarios that you've provided us with. If you could think about structurally, because this is the challenge we face, right? We don't want to add burden to the small businesses. We don't want to add burden to the professional associations. We don't want to add burden to what you do. But we have to come up with some way, some place in which high quality insurance and thought leadership to get the right insurances is available to small businesses, whether they are a member of a business association or not, certainly if they're a member of a professional association, that is a low cost, easy access, high quality site or a portal of some sort where competition can be seen to be existing. I don't know that such a thing exists. If it were to exist, what would it look like? I leave that with you as a question on notice, and I'll go to the Deputy Chair. Questions to be followed by Mr Moncrieff and then Senator Scarr, and we also welcome Ms Tanya Lawrence, the local MP. Thank you.
Thank you very much for your evidence this morning. We do appreciate the time you have taken not only to prepare your submission, but the time you'll give the committee this morning as we move forward with our deliberations and putting forward recommendations on a national footprint. During your submission, you spoke briefly around the possible closures of business. Do you have any evidence to support that, any empirical data, so that we are able to take that into consideration?
Thank you, Senator, for the question. We do have statistics on it, but we do have anecdotal evidence. We know at least 3 businesses in regional Australia where the premiums have gone up significantly. We have our small business advisors in the region. The premium have gone up significantly in order of, 60 to 70% increase in premium, which really force them to closure. So there are cases in that where people have either decided to close their business or they've decided to on-sell. But on-selling as well is hard to sell the business when you're struggling to get insurance.
Yeah. You said that you can't find anyone to insure some of these. Can you give some examples of what that would look like?
Examples of particular industries or activities?
Yes, you said anyone, if businesses finding it hard to get insurance. I think you referenced in the opening statements it was in regional areas.
Yes, that's right.
I'm just asking for ask you to expand on what they look like.
Sure. So, for instance, a large hotel and accommodation provider in a regional setting of the state only insures the pub side of things. It cannot afford to insure the accommodation side of things just because it's not viable. Part of that cost includes the cost of getting a private security firm to monitor events, and their premiums have gone up significantly, the private security, that they then pass on to the bar. So they need to absorb that cost or make a decision not to cover other parts of their business. So that's one particular example that comes to mind. I think a few years ago we were aware of a jet boat operator in the state southwest that could not get any insurance because basically the market withdrew from high-risk tourism activities. But as the Commissioner pointed out, we don't have any empirical data in that regard. We do hear it from our regional contacts and through our networks across local governments and business advisors. And I understand you will be meeting with the regional chambers this afternoon, and Ms Kitty Prodonovich, I'm sure, has got ample cases that she'd be happy to share with you.
Lovely. I might leave it there then, Chair, and then follow that up with the regional operators this afternoon.
Over to you, Mr Moncrief.
Thank you, Chair. You spoke around the impact on the COLD community, the cultural and linguistic diverse communities. Are you aware of any guidance or support that's being offered to insurers or insurance brokers or insurers directly to these communities?
I'm afraid we are not, Senator. We've scanned for them. We can't find anyone who is doing much in that space. And I would like to take the opportunity to cite there was a classic case in WA sometime last year. There was a fire at the Morley markets, and it was quite, devastating for, it's like on average for 30 small businesses in these, sort of markets. We went on site. We went on site to provide business advice to them. Language was definitely a barrier, and when people are going as well through that level of stress, we just lost their business in the fire. To try and communicate with them and help them and offer support was quite hard. The main thing which really struck us was the level of under-insurance or unawareness about the need for insurance within this particular community in Morley. And that's something which we've spent quite a fair bit of time working with them on every aspect of business advice, where we can give them business advice in different languages. We've been developing our education material to target more and more people from a CAL background. So we also give them advice such as about workers' compensation, how it's a requirement by law, specific materials on home insurance and your business, solving insurance access for small businesses, why your business needs insurance. So we've done that in multiple languages to try and help them. Our website as well is accessible. People can change the language to be able to read the material in different languages. But to answer your question more specifically, is there enough in that space? Is there anything in that space? Not that we are aware of.
Yeah, so you got stuff on your website. Have you done anything to try and get that out to the communities, or is it mostly just incoming people to your website?
Yes, we've got some the website itself to reach CAL communities can be quite challenging. Yeah. So we've been working with local members to get access to the different areas, and we've also been working with the Office of Multicultural Interests in WA to get access to different groups. I've been attending most of the functions to try and bring, and it's not just for insurance, it's also for business advice, where this group, the CAL communities, which constitute a large part of small businesses in WA and I would think nationally as well, they don't have access to business advice. They don't have access, they don't know what's out there for them. So we've been actively going out to try and make sure we tell them about us, the services we provide, and the risks we need to be aware of as well.
You mentioned business advice. Are there other parts of the financial sector that you find are lacking in this area as well? Obviously, I think most culturally and least diverse communities are engaging in some way with the banking sector. Is the banking sector doing enough to reach out to the culturally and linguistically diverse communities? Are the other financial sectors doing enough?
I think the banking sector, when it comes to their products, they're generally quite good at providing that in different languages, right? That's where I think, looking at what the banking sector has done in that space, it would be good to see the insurance sector doing very similar initiatives to reach out more, instead of things in English. There's an expectation that we would understand it, but when you look at insurance literacy, even for people who are fluent in English, can be quite hard to understand. Understand the terms. even sometimes looking at the definition of what's a disaster, what's a cyclone, and all of that, floods and all that can be challenging. Things have been evolving, but how do you now expect a small business owner who also coming from a culturally linguistic diverse background to understand these changes and how, when does these things apply to them or not?
Thank you.
Sorry, can I just add as well?
Mr Hasselbacher?
I think financial literacy is a problem for many small business operators, regardless of their background. So that's an important role that the SBDC tries to fill in terms of providing some basic level of information and guidance around tax obligations, workers' comp, so on. And I think that more could be done in that space by industry as well. So, you know, we do often say, reach out to an accountant, go talk to a professional business advisor, because there are limitations around how much advice we can provide from a financial perspective, a legal perspective. So, you know, we are just really there to provide the business foundations, and then we hope that the business person then goes and seeks out more specialist advice. So it's a challenge across the board, so I wouldn't just pick it on the core community.
The Australian Banking Association represents all the banks. You've indicated that their product differentiation across cultures is very, well, meets the community where it is. Have you made any suggestions to the Australian Banking Association or any banking entities about curating reputable sites for their business owners to be able to access high quality advice around insurance?
Not to a banking community, Chair. We have, I'm a member of the Insurance Council of Australia. There's a working group which I'm party to, and we've been making representation through that forum, but not through the banking sector, no.
Thank you very much. Over to you, Senator Scarr.
Thank you, Chair, and thank you, Commissioner, and your colleagues for attending today. It's greatly appreciated, and as my colleagues have noted, thank you for the quality of your submission. An issue which has been raised by a number of stakeholders is the impact of state duties and charges on insurance premiums. So to the extent someone procures insurance, they've got to pay duties on the insurance that they procure, and it's been described as a tax on risk mitigation. In a way, the greater the risk mitigation, the greater the tax or duty or charge that needs to be paid. So I'm interested to know what the position is in Western Australia and any discussion with respect to reform in Western Australia.
Thank you, Senator, for the question. In terms of insurance duties, right? We look like we've. I think every taxes. Small businesses will benefit if there's any cut in any sort of taxes, and yes, I mean these taxes, insurance duties do compound the issue, but in my view, they are not the main reason what's causing the pressure on industry. When you look at premiums rising, I mentioned earlier, we have cases where premiums have gone up by 60%. I don't think, I'm not saying cutting the taxes won't help, but taxes are there for valid reasons for government to be able to regulate and do things they need to do. So I think we will welcome a cut to the taxes if there's anything, and I think it's quite standard across the board around the 9 to 10% mark in terms of what duties there are on top of insurance. But I think the elephant in the room is mainly how the premiums have gone up significantly.
So in a WA context, it's about 10%?
Yeah, 10%. 10%.
So,
yeah.
10%.
Yeah.
Okay. Okay, thank you. Has that come down over the years, or has that been, there hasn't been much change to that?
I think it's been fairly standard over the years, and I don't think there's been much change nationally. It's been around. That's the benchmark. I said 9% in New South Wales and 10 in WA. And it's on average, it's between 9 and 10%, so on average, and it hasn't changed for many years.
Ms. Brood, did you have anything to add?
No, nothing further, no.
Okay, all right, thank you. To what extent or in what sectors does the WA government provide any support with respect to the acquiring of insurance by small business? either through providing reinsurance or some other sort of support to make it easier for small business to acquire insurance?
Look, in the broader sense, I think the WA government has, been funding the Small Business Development Corporation, being us, to provide advice to small businesses about the importance of insurance. But in terms of stepping into that sector to ensure that small businesses can get insurance, I think there's an expectation that the market and the market itself will do that, which is unfortunately in certain sectors it has worked, in other sectors it's a bit harder to get insurance. I can talk about in the building industry, for example. Yeah,
if you could. That's a very very important industry and has many small businesses.
There was reported market failure in the early 2000s, where most of the insurers stepped out of the market for home indemnity insurance, and a few state government, including the WA government and New South Wales and Victoria, the government stepped in as a reinsurer to be able to ensure that there are providers in place to provide the insurance. Home indemnity insurance is a very important insurance to protect consumers. So government stepped in to be a reinsurer to facilitate getting someone into the market. And that's where we see with a reinsurance pool in Northern Australia and a consideration of an extension of this pool. I know it's easier said than done, but will significantly help. When you look at, how, like we talk about, Northern Australia, there are cyclones, floods, and other issues. But when you look at the small towns in remote WA, given the size of WA, they do face some very difficult situation in trying to find an insurer.
Okay.
That's where.
So just teasing out both those areas. So first, in relation to construction.
Yep.
That reinsurance support was provided, you said, following market failure in the early 2000s. Has that worked effectively on the ground in WA to assist small businesses in the construction industry to secure insurance on affordable terms? And are there any lessons we can take from it?
Look, definitely, when there is reinsurance, definitely the market, there will be providers in the market. So there is a market, the market has worked. Builders in WA are not struggling to find insurance because there is an insurer, right? Has it increased the number of insurers coming into the market? No, it's not something which is, overly sexy, where people, like a lot of insurers will run or compete either way to get into the market. But in terms of the availability and the premium, yes, having a reinsurer has definitely helped.
Okay.
And the reinsurer being backed by government has definitely helped.
Okay, that's good. Any other additions on that in terms of any reflections on that reinsurance scheme for the construction industry?
Not on the construction industry, no.
Okay. No? Okay. And then we've got the Northern Australia reinsurance pool. So from afar, in my home state of Queensland, I saw the devastating impact of bushfires in WA, not in Northern Australia, but catastrophic environmental impact on everyday residents. Is that one of the reasons why you think consideration should be given to expanding the scheme to cover other sorts of events and perhaps reconsider the geography?
Thank you, Senator. 100%. I think in terms of when you're looking at climate change and what's happening, and we spoke briefly off record afterwards, where I mentioned there were times when in Queensland they were not really worried about bushfires, but now bushfire is an issue. We're seeing climate change in WA as well, more and more cyclones, stronger cyclones. So you want people to be able to be adequately insured, not underinsured, to be able to be covered when there are more frequent cyclones, stronger cyclones. But also, I think I did touch briefly in my opening statement as well, in terms of, when you look at underinsurance, that's a big issue in the sector. And also the ability to build better, because we want people to build houses like building codes, for example, have become more stringent over the years. You expect people to build better, so their accommodation, their infrastructure are more resilient to cyclone. You don't want to build back as it was. So that ability for insurance to be provided so people can meet that increase in stringency for infrastructure is also important.
Yep. So, yep, understand that. And last question, the submission touches upon the issues raised by the illegal tobacco, black market, organised crime. We've had a number of arson attacks in my home state of Queensland. So the way this has an impact on all of the small businesses located in a strata development. Is that the issue? So you may not even be selling tobacco-related products, but you might be the hairdresser next door, but you're impacted by the issues arising from the illegal tobacco trade. Is that correct?
Yeah, certainly, Senator. That is what we are hearing from clients that are contacting us for commercial tenancy advice. So we provide a specialist commercial tenancy service, and some of them contact us to talk about trying to either reduce their costs, their operating expenses, but also potentially exiting their rental agreement due to the impacts of other businesses within that strata unit or shopping centre, and how that's impacted on them, even if they're innocent bystanders, so to speak.
So it's fair to say, and I'm not sure how insurance works in WA in this context, but if you're in a building that has, say, 5 shops and the landlord has to get insurance for the building, typically they'll apportion the insurance across each of the tenants.
Correct. Yep.
So is the concern that I'm a tenant, I'm not involved in tobacco-related sales, I've got no say with respect to who my landlord rents other shops in the building to, but I'm impacted by the insurance costs. Is that correct?
That's correct, Senator.
And what's the answer to that?
I'll step in. I would say that a lot of those, the reports we heard were prior to the legislation coming into effect in WA. So I would suspect that there will be a downturn in
so
the
please
number.
explain the WA legislation.
Yeah, so the barring orders in terms of the closure orders that were put into place, so that we've seen about, Martin will have more data on this, number of businesses closed.
About 40 at this stage after about 2 months of the legislation being in place.
Yeah.
But what we see in Queensland is you close one and they just pop up, someone else pops up at the same time. I drive around between my home and the office, these gifts and accessory stops and convenience stores, they just keep popping up, don't they?
I think absolutely. The point about so whether it's one area in Australia or one site being influenced by a risk profile of another site, I think that's absolutely a problem even across the board in how the insurers are apportioning risk and how it crosses places that may not be necessarily a higher risk. So I think something we've identified is whether there can be more transparency around how those risk calculations are made. We have heard instances of, even with different towns being caught up in the same sort of risk assessment for the decisions around the insurance premiums.
Okay.
Yeah.
All right. Okay, thank you. Thank you very much.
Thank you, Senator Scarr. And just for a couple of quick questions, I'll go to Ms Lawrence, noting that the next witnesses are here.
Lovely. Thank you very much, and lovely to see you again, Mr Hasselback. It must be like 2 decades since. Thank you. Look, I just wanted to clarify, particularly, Commissioner, as you mentioned that you are part of the Insurance Council as a working group. Yes. So, just with respect to the first recommendation in your paper, strengthening insurance literacy and risk management capability. To what extent are you finding a receptive audience to that request within the Insurance Council themselves?
Thank you, Senator, for the question. Look, group I'm part of is called Insurance Council Business Advisory Committee, so we do provide advice up And I would say, look, there hasn't been as many meetings as we would have probably liked to have. But in terms of increasing literacy, we've been having some good conversations about it. Has anything come out of it? No, not yet, because we have a committee. The committee reports back to association, and the association then has to work with its members. And I think with these sort of spaces, I think sometimes it's a question of how much committed the members are to make the changes. So we haven't seen, I'm afraid to say we haven't seen much changes at this stage.
So with insurance policies having, there's, I think, been some improvement over the years in terms of making sure that they're easy to understand and their terms and the coverage limits and so forth are put in plain English. But in terms of your advocacy then, do you see that that's a space perhaps where insurance companies themselves could have more obligations and a duty of care to ensure that the products that they're selling are understood by the businesses?
100%. I think that's definitely an area where I think whether it's a question of when through advocacy we're trying to do it, whether there's anything which through the work of a committee where there could be some more requirements, probably a bit stronger in terms of the requirements for businesses to have targets to deliver on how they would improve their products, the literacy of their products, or converting them into plain English and reaching out to different community group as well. I think there hasn't been any target set. It's more on a voluntary basis. So the movement in the right direction has been a bit slow in that space.
And I know you spoke in terms of the example, particularly around the case studies that you provide in your report, which were really, really helpful. But with respect to the psychology practice in particular, where the panel is required to be a part of the panel, are requiring to have that cyber coverage. Again, in terms of advocacy, are you in a position, or have you been able to help, be it government agencies or local government or wherever it might be coming from, in terms of who's setting the requirements about whether that's a necessary insurance coverage that's required for that type of activity? Like, is it the role of the SPDC to do that work?
We do have a role within government. So when there are changes being made to legislation, we will advocate on behalf of small businesses, and we've been reaching out to the Department of Treasury and Finance, which are the main provider for procurement rules in the WA, to improve the procurement rules. So the insurance requirements are able to be commensurate to what's being required, because sometimes what we've seen is the insurance requirements are quite high or too high for the type of things we are bidding for example. So Treasury and Finance in the WA has been quite receptive to it, but sometimes it's on a case-by-case basis as well, depending on what type of tenders they are initiating.
So are you seeing then that within the procurement divisions that they are being advised by insurance companies as to what the coverage will need to be across different categories, and be it for public liability or professional indemnity, or is it that within the agencies and departments themselves that they are self-setting what they think it could be? Like, are they doing a risk assessment, or who's deciding what the conditions are before someone nominates to be on a panel?
That's a very good question, Ms Lawrence. So in Western Australia, we have the Insurance Commission of Western Australia. That is a government statutory authority that sets the government's insurance. It covers our compulsory third-party insurance for motor vehicle damage, but it also oversees the government's risk appetite. So they, I understand, do a lot of actuarial assessments of risk to government and provide advice back to Treasury and Finance, which is, as the Commissioner highlighted, the central agency that sets the procurement policies. Okay. To their credit, Treasury and Finance have come out with some, updated guidelines, which does talk about maximum probable loss to government in terms of determining the level of insurance, and that they actually indicate that the amount of insurance should should be based on the likely financial exposure or loss that the agency would incur if the risk materialised. So it really should be set to the contract. What we are seeing in practice, however, is in a lot of cases, procurement officers within government departments take the highest risk as sort of the baseline, and therefore they're after $20 million public liability insurance for maybe a contract that's only worth $5,000. So if you're a small business, you might be paying $1,000 for the $5 million public liability, and in order to get the $20 million coverage, it will cost you another, say, $3,000. It's not worth it if the contract's only for $5,000. So I think there's a bit more work that could be done with those procurement practitioners within government departments to get them to better understand the risk settings of their contracts and how they can better support small businesses to contract back to government.
And is it your understanding then too that that would be the same with the local governments? Is it Walga that undertake that work, like the Insurance Council is doing, to set the risk?
Thank you, Senator. WAGA plays a coordinating role in educating local government, but we don't really help with setting the benchmark. So what we've been doing is trying to share whatever has been happening at state level with WAGA, but again, it's more on a case-by-case basis because, I mean, each local government is a separate jurisdiction, so we do our own things. But WAGA does provide that high-level good practice principle for local government to adopt.
Excellent. Thank you so much for your time.
Well, can I thank you very much for attending today. The committee has given you a couple of questions on notice. There may be more to follow. If you have been asked to do so, could you respond by Monday the 17th of August to those questions? Thank you very much. I now welcome to the table the National Electrical and Communications Association representatives. I understand we have one advocate in person and one online.
Terrific.
Good morning. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names and the capacities in which you appear today?
Yep. My name, Chair, is Mr Scott Farragher. I'm the Government Affairs Manager in Western Australia for the National Electrical Communications Association.
Thank you for joining us in person. And we also have with you Mr Kent Johns. Would you state your name and the capacity in which you appear?
Yes, Chair, it's Kent Johns. I'm the Head of Government Relations and Regulatory Affairs for NECA, and I apologise I couldn't make it in person.
Thank you very much, Mr Johns. And just so you know, in the room with me, from New South Wales, Mr David Moncrief, MP. From Western Australia, Ms Tanya Lawrence, MP. Myself, Senator O'Neill, the Chair. The Honourable Scott Buchholz, Deputy Chair from the great state of Queensland. It hurts me to say that as a New South Welsh woman. And also Senator Paul Scarr, also over-representing the Maroon state. Thank you for being here. Could I ask you then to provide the committee with an opening statement, and at the conclusion of remarks, the committee will have questions. Mr Farragher.
Terrific. Thanks, Chair. Yeah, we do have a brief opening statement, and thank you to yourself and the members of the committee for the invitation to attend in person today. NECA, as you might know, is the peak body. We represent more than 6,500 electrical and communications contractors across Australia. The vast majority of our members are small and medium-sized businesses employing apprentices, tradespeople and support staff, and we deliver services across all the construction sectors, infrastructure, energy, communications and renewable sector. Our members operate, as you might also be aware, in a highly regulated and licensed environment, safety critical, and from our perspective, insurance is not optional. We're operating in an environment now where public liability, professional indemnity, workers' compensation and increasingly cyber are often mandatory requirements to hold licences and also to participate in government tenders and contractual obligations on major projects. So without insurance, it's simply put, our businesses can't operate. Three main themes from our perspective. One of the key issues from our members, as you're aware from other small business associations that appeared before the committee already, is affordability. Many contractors are experiencing significant uplifts in recent times in insurance costs, coinciding with labour shortages, material costs and other operating expenses, which are placing great pressure on our small businesses. Unlike many other business costs, insurance is not easily reduced or avoided in the electrical sector. Contractors have to maintain cover regardless of economic conditions, and ultimately borne by small business owners, employees and their customers. A second issue is transparency. Small businesses often struggle to understand what is driving the premium increases, how risk is assessed, and whether investments in safety, training and compliance see an offset in premiums by insurers. Electrical contractors invest heavily in workforce training, safety systems and management, and we need confidence that those efforts are reflected in the underwriting decisions and pricing outcomes of insurance policies. A third issue, which I know you've also heard from other witnesses before the committee already, is availability. As predominantly focused on small and medium-sized businesses, when insurers withdraw from certain markets, this has a great impact on individual businesses, affects project delivery, supply chains, workforce opportunities, particularly in construction infrastructure and regional Australia. We're concerned at NECA also, in particular, about cyber insurance as contractors adopt smart technologies, connected systems and digital project management platforms. Cyber cover is becoming a commercial necessity. However, it does remain difficult and costly for many small businesses to obtain. We believe insurance should be recognised as an essential economic infrastructure for small business, and the fact that a well-functioning insurance market supports investment, employment and productivity. When affordable and accessible insurance becomes unavailable, it becomes a barrier for our members to participate in economic participation and growth. So we welcome the opportunity to provide evidence before the committee today and have the opportunity to have put a submission in during the inquiry period.
Thank you very much, Mr. Faragher.
Yep.
And thank you for your submission number 46. As we are in Western Australia, I'll give the first call to the local, Ms. Tanya Lawrence.
Thank you so much, and thank you very much for your time and your submission. I'm actually wanting just to step back and just get a few clarifying remarks from you, if I could. I think your sector is probably one of the most regulated in the sense of the training and the safety and the precautions that members have to take in order to undertake what is a very high-risk activity otherwise in the absence of it. And so I was interested in your opening comments about that it's not necessarily that level of safety and precautions, not necessarily then reflected in the insurance premiums you pay. And just want to be clear about the kind of data that you might have to hand that you've then been able to present to the Insurance Council to help them understand that the price is not reflecting the safety environment that you operate in.
Yeah, no, sure. Happy to. I think, very broadly we support and have worked closely with ACCI with regards to the problems facing the small business sector as a whole. And I suppose issues that are prevalent for the Electrical Contracting Association or electrical contractors in electrotechnology in particular are the fact that certain insurance types are mandated for licensing. Public liability insurance, workers' compensation is common to all, obviously, but they're mandated by the licensing boards in most Australian states. A couple don't, but in Western Australia in particular, that is compulsory, as it is in most states.
Mr. Faragher, do you know? Faragher, yes. Do you know which states are not?
We do have that data. If you like, I can provide that.
Yeah, great. Thanks.
Provide that after the hearing today. I think I've got here. Look, I haven't got that
That's all right.
easily at hand. Yeah. So
You get a sense of.
yeah, no, there are
Isn't it?
differing
Yeah.
licence regimes in each state, but
Yeah.
broadly it is compulsory. We recognise we're caught up in the broader small business sector that we're caught up in the same band of the increases. For the electrical sector, though, we are caught up in the contractual obligations in the construction sector and other sectors where we have to take the obligations of a head contractor and they flow through the contracting chain. So, in essence, it's a mixture of contract terms and also just the general movements for reinsurance in terms of the pricing. But actually, Mr. Kent can go into more detail with respect to the contracting issues, because we've also been very active in a space, because it is conjoined with efforts we're trying to advocate for our members with regards to unfair contract terms.
And just before you jump to that, and
Sure.
I'm happy if you would like to take this on notice, but I'm just trying to understand for your sector where the actual risks are materialising to reflect the premiums you're paying. So, and if there's data, is the workers' compensations your highest risk category, or is it public liability?
No, sure, yep.
Just if that could be perhaps that data be provided.
We can take that on notice too.
Sure.
But I think more broadly, the electrical sector would be regarded as, with construction, a high risk industry. So we're immediately caught up in terms of whatever the premiums within those sort of but like
data relative to claims made, like it'd be just interesting to
okay.
get a
We
land.
can try and get you a breakdown on that. Yeah,
I can understand on the face of it why it's deemed high risk.
Yep.
And there might be a high premium, but I just want to know to the extent that actually is grounded in reality.
Yep.
And how much safety net is surrounding, particularly the electrical component of that construction sector.
No, sure, and it's we'll see if we can drill down and get some quantitative data in terms of what the gap is.
Thank you, but sure, please do.
But it's going to be the gap between the fact that we have to operate within a high safety framework, and to what extent that's taken into account for the fact that we get charged a premium for being a high risk industry.
Which I don't think is the way the sector's intended to operate, right? It's meant to reflect the risk.
That's right.
As opposed to perception.
That's right, and that goes to the issue of transparency. I think that
and they have
you
a
brought
lot
up
of
before,
data.
which is how business get certainty with regards to how that risk is assessed by insurers, so that they're not they're being priced fairly, given the requirements and the high regulatory standards in which the electrical sector has to operate.
Thank you very much.
Sorry, I think I might have cut him off on the contract.
Mr. Johns, did you want to add anything?
No, I think Mr. Farragut has done quite well, but a lot of what is reflected in risk that our members have to take on board as subcontractors, a lot of the time we are actually taking on unfairly allocated risks. So, for example, while we are not part of the design, we have to accept those risks and accept contract clauses that drive the premiums up. What we also find is there is a variation, and even in our industry, there are our members that spend a lot of time training, implementing safety systems, implementing cyber security, and others in the sector that don't. So we want to see that transparency in the insurance policies reflected in the effort that the excellent subcontractors do, as opposed to a broad industry profile. And we can't seem to be able to get that apart from claims history, which is what is explained to us. But we want something more reflective of the quality and the investment that our members make to ensure that they're not taking those claims. So the main thing you will probably get from us is unfair risk being passed and allocated down from government procurement policies, or also head contractors being unfairly distributed to us, where we shouldn't need to be able to take those risks on. That said, we are working quite closely with Minister Rishworth and the NCIF to start addressing those issues.
Thank you very much for that evidence, Mr. Johnson. Could I ask you to take on notice what such a structure might look like. Otherwise, you'll get one designed by a committee that ends up with rather differently shaped elephants, from what I understand. My concern is that really great contractors who have been doing things previously, like such as paying their superannuation properly to all of their employers, were in competition with shonks in the industry who were not paying that. Now we're in a different point where there's an even playing field there. There is a degree of power asymmetry that operates with many of your contractors when it comes to tier one providers of major infrastructure that prevents them from advocating for themselves, or a sense of risk that they might lose their contracts if they don't simply comply. So what would it look like, Mr. Johns, to provide sufficient protection for workers at the same time as rewarding those who operate at a high level of safety, and some access of, an even playing field to allow that undue influence of tier ones on contractors flowing through the system? What would an efficient, non-regulatory burden model of such a thing look like? And while you're at it, can I ask you to think about, Lloyd's of London, brokers, etc. Lots of people don't understand that whole structure. In fact, I'm going to confess, as it was commencing here, I thought Lloyd's was a place. Apparently, it's a collection of places that operate in the London market. Many people wouldn't be aware of what their options are in terms of access to brokers, particularly for this sector. Are there specialists, etc.? And how would a new entrant who's coming in to provide competition in the market find the right product at the right level, given that the government puts these standards in place because policy is being set in response to problems that are emerging in the community around access to responses where insurance is required, where somebody has suffered a terrible workplace injury and their family need to keep a roof over their head. So can you think about that on notice and provide us with something you think, from an industry point of view, not from a government point of view, from an industry specialist point of view, might work in the tier one context? Thank you, and I'll go to the Deputy Chair, the Honourable Scott Goltz, for questions now.
Thank you, Chair, and thanks for your evidence today. And it's a shame Mr. Johns didn't appear in front of us today. I have the great privilege of your company now. No ticker, Mr. Johns.
Thank you, Mr. Buckholz.
Are you mates?
I spoke at their conference more recently.
There you go. All right, okay. Just for those who are following along.
Scotty's
pretty
Mr. Buckholz is mates with everyone.
This is a really good industry, and my second oldest daughter is an electrician.
Okay.
And she's a qualified trade, and from a household we saw what work she did through her training and the level of competency that electricians have. So my questioning today goes around that. I can understand in the likes of North Queensland, where it's high disaster prone, highly volatile when it comes to weather events of cyclones, fires, where there is a number of insurance claims made that reflect on the premiums. But when I look at the industry of, the electrical industry, the level of the high level of competency that exists, my first instinct is that it's not a highly litigious environment. Can you confirm whether it is or not, so that I'm starting at the right spot? I mean, how many claims would the electrical sector be subjected to? Let's start there.
It's an excellent question, Buckholz. I think the way we address it is we're seeing more and more claims occurring, especially where workers' compensation is involved. There's now worker and contractor litigation is becoming more prevalent, where the workers' compensation scheme itself will then go after the insurers, which is driving workers' compensation up. That said, what we're seeing is workers' compensation has increased, I think, about 38% over the last 10 years. But then again, so has wages as well have risen by that. So the average hourly rate of an electrician has gone from about $23.25 an hour to about $32. So those are approximately up by about 38%. Our problem is when we accept And the issues are, while they're not being claimed on insurance, we're accepting higher risk and taking higher excesses to be able to afford those insurances that are compulsory. And there are often negotiated claims occurring at a commercial level, which we're seeing increasing as well. So, no, there is a lot more of a litigious nature occurring in the construction industry. There is also an increase in claims that oftentimes aren't seen as insurance claims because the excesses are so high, or when it does occur, the excesses are so high, or the insurance policy isn't adequate, where it is essentially impacting or removing the business. So where we have, we are seeing increase in insurance premiums, and that is revolving around labour, wages, and probably a more litigious society. I think some are even referring it to as, everyone now has a ChatGPT lawyer.
I think I take on board your comments around workers' compensation, but that issue is a separate issue to, I think, the core of this inquiry. That workers and comp stuff sits squarely with each of the states. I am trying to understand how litigious the actual. Let's give a particular example, because in your submission you spoke about electrical contractors play a critical role in disaster recovery, infrastructure resilience, and regional development, yet disproportionately penalised by insurance settings. So let me offer you an example, and then I'd like to get your response to it. So a house in a metropolitan area is affected by a natural disaster and needs to be rewired, versus a house in a regional remote area has been affected by a natural disaster and needs to be rewired. For all intents and purposes, they're identical jobs. Are you suggesting that the insurance coverage an electrician needs to go and work in the regional area is somewhat higher than the metropolitan area?
What we tend to see in the regional areas is commonly they're higher premiums because there are more limited insurance options, and weather-related assessments and reduced competition between insurers. These pressures do impact the regional areas. More broadly, where we see significant natural disasters with our electricians, we often have to mobilise them. So, for example, far north Queensland, you'll see a lot of our members mobilised to go to those regions to assist in the surge period.
Correct.
But we are seeing that because in the metropolitan areas, the works are isolated to specific technicalities or specific skill sets. In the regional areas, they have to have a more broad application of their skills. So that also impacts their insurance premiums because they may not be working on the larger works. So proportionally, the insurance cost is proportionally higher for the work that they're undertaking out there. So, for example, you'll see a lot of times that you may only be doing a $20,000, $30,000 job, but you always have to carry your $20 million public liability, professional indemnity, that sort of things, where, it's not reflective of the risk being taken on the work that are being undertaken. I hope that makes sense, Mr. Buckholz.
Yep. So that would be reflective in the higher cost of reconstruction in a regional area, which the Australian Insurance Council have given evidence along those lines to this committee. So you're reiterating that your cost of doing business in a regional area as a result of needing bigger reinsurance is greater in a regional area than a metropolitan area.
Yes, that's what our members are telling us.
Yeah. Okay.
Last question?
Can I come back?
If there's time.
Yeah, Paul.
We'll rotate to Senator Scarr and then come over to Mr. Moncrief.
Okay. You can always come back to Perth.
That's it. Yeah.
Okay. I know it's been a very fulsome and very good discussion. So I'll try and keep it as high level as I can. So, Mr. Johns, that's really interesting about the. Is it the contractors looking to push the risk down onto the subcontractors, or is it the principal seeking to pass risk onto the contractor, who's then passing it on to the subcontractor? What's the main issue?
Governments and large builders force smaller contractors to accept unfair contract terms, such as they're included as the named insurer, the principal indemnity cover, or waiver of subrogation. So each party should only need to have the liability that covers their own negligence. We're being seen to cover all aspects of some sites, and I think the issue there is they will force down that risk allocation to the subcontractors, whether it's the electricians, the plumbers, the tilers. It's to do with all subcontractors. If you look at NEGA, 85% of our members are 10 employees or less. And they're subcontracting and subcontracting. So that risk is just being disproportionately passed down to alleviate and remove the risk from the head contractor or the tier one construction contractor. And we're seeing that all the time. That is a...
Yep. No, I understand. So so from a government procurement policy perspective, is the argument that, and I understand you're in discussions with the relevant minister, and that's very positive, but presumably the discussion is that the governments, both federal and at a state and territory level, need to be more prescriptive about preventing the tier one contractors from seeking to push that risk down. Is that correct?
Yes. So where there are clauses that allow for certain reliefs that are given to the tier one from a government procurement contract, oftentimes we're seeing that they are not passed on. So, for example, uncapped liabilities, liquidated damages, site conditions are available to the tier one construction companies, are not necessarily available to the subcontractor or the trades that flow underneath those.
Okay, excellent, understood. Could you take on notice, do you have any data that can show us some of the submissions we've received from different industries have given us case studies with respect to showing us how insurance premiums across the different types of insurance have escalated over the course of the last 5 or 10 years, which I think has given us a pretty good indication as to the extent of the issue. And I think, Mr. Johns, you gave examples with respect to workers' compensation, but if you could take on notice any data that you may have that can give us a better insight in terms of the magnitude of the increase in premiums or and also the increase in excess amounts, etc.
Certainly, but just briefly, the total increase in cost of public liability is up around about 100%. The main thrust of that, or the main increases, occurred during the 2019 and 2023 period, where they lifted by about 25%. And that is where we saw the significant increases in a lot of insurances.
So the 100% increase period, that's over the last 10 years, is it?
Correct.
Okay, all right, got it.
Can I ask a clarifying question there? Mr. Johns, what is that a reaction to? Is it just the market will bear it? Is there a change in claims coming forward? Has there been a diminishing level of safety that is driving an increase in claims? To what do you attribute it?
I'm not an insurance expert, I have to say that at the start. I'm here representing contractors, but from the discussions that we've had with brokers, because we do a lot of training with our members and trying to advise them to get the appropriate, it's not only just the best value, but it's also making sure they get the most appropriate insurance that covers the risks that they do have. A lot is being driven in cost of goods. So, for example, to repair something now is significantly high. This is what the brokers are telling us, not our members. But they're saying that the same number of claims does cost so much more to repair now. And we're seeing, I think, over the last quarter, a 17% increase in electrical input capital costs. So it's just the argument that we are given, and I'm not an apologist for the insurance industry, But they're saying that there's significant cost increases in the repair, significant cost increases in wages and labour, and they're saying that is what's reflected in the insurance premiums. Now, I don't have specific statistics. Happy to take on notice that we go back and see how that's done. But I think that's part of the submission that we made is we want to see more clarity of what is driving these insurance premiums up so our members can address them to adequately put downward pressure on their insurance premiums.
That's your recommendation too, and we thank you for your recommendations. Any further information you can provide, though, will be very welcome, because if you as robust defenders with a wide and deep experience can't figure out what the hell's driving this. I mean, there's inflationary pressure everywhere. I mean, things do increase. We all know that. But my concern always is where people can't see the way in which the product is being constructed, and that seems to me the case with a lot of insurance. People don't know how it's being put together.
Is it a double dip?
There's just an opportunity for fleecing to occur. That is my major concern.
One could understand that the reconstruction cost should be on a property that's been affected would be captured underneath the housing policy. The question is, for this committee, why is it then that the electrician who would have a decade ago conducted the reconstruction work for $10,000, it's now $15,000. Why is the electrician paying more for insurance?
As well as
Yes,
the home operator. So there's how many points at which this money is being acquired by the insurance industry, which is talking about a decreasing risk appetite, but seems still to be having many points of contact. Back to you, Senator Scarr.
Mr. Johns, can I just tease out that issue a little bit? When you're talking about reconstruction costs, I guess there are the costs that incurred when your members actually attend a site and engage in remediation following a cyclone or something like that, which is caused by a natural event and is covered by insurance. There's also remediation costs which might be incurred if one of your members is negligent or something and does something wrong, and there needs to be rectification works. Which is the cost you're talking about?
The cost is the insurance that covers the industry where there is restoration work needed to be done, possible rework. It's also defects liability periods and guarantees that our members have to take to guarantee the work over the not only the construction period but the defects liability period, which is oftentimes now being extended to the end of the contract, not to the end of the works that our members do. And then later on, further down the track, is the guarantees. So a lot of the insurance and public liability, we're advised, that's the reason it's raising now, is a defect may not be identified for 5 years. Now, a good contractor will do excellent work, but the industry as a whole has, on occasion, sometimes not performed as well as it has, and that those defects and reworks can be of substantial cost, especially in large construction projects.
Yeah, got it. Understood. Can I ask you, you made a comment in relation to the fact that there can be an operator who doesn't, well, two classes of operators, let's say. The vast majority of operators, vast majority of your members do the right thing. They're operating to the highest standards. Presumably they've got a very good, maybe even a nil claims history. But their insurance is going up because of the small minority who are potentially doing the wrong thing, who don't have the same rigour. In terms of the players in this space, the businesses in this space, NECA represents 6,500 businesses. How many businesses in this space would be operating who aren't members of NECA or who aren't a sort of the fly-by-nighters, etc., who are potentially increasing the cost for everyone, including the vast majority who are doing the right thing?
I don't have the exact number of figures of electrical contractors because no one ever gives up their electrical contracting licensing when they retire. But we've probably got about 20 to 30% market penetration, and I would say 95% of electrical contractors in a highly regulated area are excellent tradespeople. And like any industry, you have some that aren't. And I think that's why we're asking for the transparency, because we're always advised that it's based on previous claims history and an industry benchmark. And we want to know how that industry benchmark is ascertained, how the insurers are ascertaining the quality and the systems that sit behind each electrical contracting business, and also the allocation of risk based on the works that they're undertaking, how much due diligence is being taken there. So I think that's the argument, is a lot like this committee, what you're investigating is very worthwhile, because it's the information that we would like to have so that we can advise our members of the best way to insure their businesses.
And is there
up for that insurance?
So thank you for that, and I think we might consider what further information we require from the insurance industry in that regard. Last question, is there a greater role for regulators in terms of trying to weed out the people who are the contractors who aren't up to scratch and who are dragging down the whole industry, if I can put it that way, in terms of imposing additional costs which are being amortised across the whole industry?
Great question.
I think that's a state-by-state issue. For example, each state has different regulatory frameworks or how they implement those regulations. So without going into specifics, some states do it extremely well, some states don't do it as well as others. And that is something that we're working as an industry at a state level to improve that, but also the federal government is looking at a national licensing scheme, which I think will also help address that particular issue.
Okay, thank you.
Thank you, and I'll give the call now to Mr. Oncreek.
Thank you, Chair. And I just want to say in response to Mr. Buchholz's comments that I think it's completely understandable if Mr. Johns has chosen not to leave the paradise that is the Sutherland Shire to testify in person before us today. I just wanted to touch on, in your submission, you noted that you spoke about the reduced insurance competition. Could you give us a bit of a look about what that looks like? How many players are we talking about, and how? What's the average amount of options that your clients are going to have, or your members are going to have for in this sector?
Yeah, we don't have detailed information at hand with regards to, but in general terms, the issues that we've been discussing with regards to access to insurers in regional areas in particular is a significant issue for us. So where insurers are largely focused on metropolitan areas, or we've got specialist insurers in regional areas that choose to withdraw from certain regions, that is an issue, and it just compounds the problem for many of our members in regional areas. But happy to take that on notice, and we'll see if we can get some actual benchmarks for you.
Yeah, great, thanks. And you spoke around restrictive exclusions as well. Could you give some examples of what that looks like? What's being excluded from these policies?
Yep, sure. I think again, just one example would be the fact that an increasing number of exclusions in, say, public liability insurances that deal with cyber in particular, so that again enhances the need for specialist cyber insurance for many of our members, particularly those that are involved in the technology side of the electro-technology industry as well. And as we said in our submission, that's one area where we think greater transparency in the cyber insurance space would be very much welcomed by our members, just to understand and try and get their heads around what level of cover is absolutely necessary, as that's one area that's becoming increasingly expensive for a lot of our members.
Okay, great, thank you.
I think also a dilemma that we have, Mr. Moncrief, is a lot of contracts are now calling for consequential loss, and no insurer will cover that. And unfortunately, at times, some of our members need to sign contracts that do that, which could essentially bankrupt their business. But I do agree with you. I do love the electorate that I live in. Hughes is a great electorate to grow up in, mate.
Absolutely, absolutely. Thank you, Mr. Johnson. Thank you, Chair.
You're welcome.
It's quite outrageous. So congratulations.
Thank you very, very much. And that brings us to 10:30. Could I thank you for giving your evidence today from the National Electrical and Communications Association. You have been asked to take some questions on notice. If you could provide responses to those. And I'm sure that you've got a sense of where the committee is trying to head to deal with the challenge, make sure insurance is affordable or remains affordable where it's the case, but not to impose any further regulatory burden on any part of the sector, whether that is tier one through to the smallest subcontractor, and of course make sure that workers, particularly in a high risk industry such as yours, have the protections that they need in place at the same time. So thank you very much to both of you, and if you have any further insights, the committee would be happy to receive a further submission.
Pleasure. Thank you, Chair.
That concludes the session, and the committee will suspend until 10:45 a.m. Thank you. The committee will resume, and I recommence now with Dr. Martin Alcock. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, would you please state your full name and the capacity in which you appear today?
Martin Allen James Alcock, in my personal capacity as an academic.
Thank you, and I invite you now to make a short opening statement, and at the conclusion of any remarks, the committee will follow with questions. Over to you, Dr. Alcock.
Thank you, Chair. And members of the committee, thank you for the opportunity to appear before you today. I'd just like to start by acknowledging the traditional owners of the land on which we meet today, the Whadjuk people of the Noongar Nation, and pay my respects to elders past and present. I'm a legal scholar, an academic, employed as a senior lecturer at Edith Cowan University. I have legal practice experience in the areas of commercial insurance, workers' compensation, in my brief time in legal practice, after which time I entered into academia after completing a doctorate in law in the area of negligence, so tort law, negligence, injury law particularly. I've published numerous articles and books on the subject, so I thought I would like to make some submissions to the committee. Now, I strongly support the objective of the inquiry to ensure that small businesses and not-for-profits and community organisations can gain access to affordable insurance. Insurance plays a crucial role in ensuring that risks are managed throughout society, and I'm of the view that it's vital that healthy insurance markets are maintained. I've got three broad messages which touch upon my submissions for the committee today. First, any potential reforms to the law of negligence should serve not only the purpose of healthy insurance markets but also ordinary Australians. Ordinary Australians are the people that get injured in workplaces and in other places where work is carried out, and it's important to keep in mind the effects of changes in law on ordinary Australians. Previous changes to civil liability settings in the early 2000s had resulted in the reintroduction of a number of laws that had been discarded by our High Court of Australia over the previous 50 years prior to that as arbitrary and unprincipled and operating in a way that had an unfair burden on us, the shoulders of the injured. So I hope that any potential new reforms to the law don't do that. Secondly, I just want to make sure that that it's clear that the way that the law of tort operates, and particularly the law of negligence, is to was to deter risky behaviour, and it has a function in spreading losses so that those losses are less economically inefficient, and so any reduction in ambit of liability has a negative effect on the ability of the law to do that. And thirdly, I'd just like to really talk about the availability of data, as the last civil liability reforms were arguably could have had more complete data. And I think from what I'm hearing already from sitting and listening, data is a crucial thing. Thank you.
Wonderful. Thank you very much, Dr. Alcock. And I might go straight to the Deputy Chair this time.
What percentage of increases have you seen in work cover claims over the last couple of years? Do you need data sets on that?
I have no data sets. My work is on the legal doctrinal limits of the law rather than claims numbers. It's an area that I'm highly interested in, but I haven't had a chance to research that in particular, and I think that would be very valuable work to do.
I was only interested given that your first point that you raised was around that work cover claims. I thought you might have had some starting points there to make your assumptions on.
No.
Okay, well, I'll refer to you then to Senator Paul Scar, who's our legal counsel, one of our advisors. So he'll talk to you to all things.
He's got two jobs. He's a a senator and a legal counsel to the committee.
First, thank you. There you go. First, thanks for your submission, Dr. Alcock. And I think the points you make them very strongly in terms of recognising the fact that people's ability, everyday Australians' ability to make legal claims when they've suffered harm in the context of some sort of negligent act or omission is an extremely important common law right, which we need to be cognisant of. So one of the first points I wanted to explore with you is you've read the Insurance Council of Australia submission.
I have.
Right. Have you read the Queensland Law Society submission?
I don't think I read that one. No.
Okay. So can I ask you to take on notice, and it might be worthwhile for you to explain to the committee, a lot of the law dealing with the process of claims is done under state and territory law, not under federal law. And there are differences between the approaches undertaken by different states and territories. So one of the examples we received in Queensland from the Queensland Law Society is the obligation under the relevant Queensland legislation for there to be pre-trial meetings between parties where all the evidence is exchanged. So each party can see the medical reports, etc., of the other party, so that you can have the most productive settlement discussion as possible before you incur the additional costs in terms of going to trial. And the Queensland Law Society said that was a reform which, from their perspective, doesn't undermine the rights of their members' clients, everyday Queenslanders, but does assist to try and get resolution of matters in an expeditious way. So first, I might just ask you to explain to the committee, so we can get the evidence on the record, that the states and territories have their own different regimes with respect to how a lot of these claims are processed.
Correct.
Is that correct?
That is absolutely correct. And it raises a really important point, which is about consistency across jurisdictions. So if we think about, and I'm coming at this from a completely academic perspective, not an industry perspective, so there's limits to what I can actually testify to. But the insurer's role is to put risks in appropriate levels of categories of risk, and then they can price those different categories appropriately depending on how risky the insured is. And that's from the academic perspective, it's the insurer's professional advantage. Inconsistency between jurisdictional requirements is in itself a threat to the insurer's advantage. So let's take the claims for psychiatric injury, for example. We have effectively two broad different approaches across the country. WA and ACT have a broadly similar approach, which is akin to the common law requirements. And then we have different approaches in New South Wales, South Australia, Victoria. They kind of sit in another category where they place additional limits on those sorts of claims. So you've got to show either presence at a scene of an accident or something like that, or you've got to show that you're in a category of loved one with someone that's injured, whether it's a father, mother, child, those sorts of things. But they're inconsistent between the jurisdictions. So, for example, New South Wales will, for example, defines the categories of family that are allowed to make claims. Victoria says close member of the family, and that's left undefined, which means, practically speaking, if you're as South Australia does something similar, it means that if you're a brother of someone who gets killed by someone else's negligence and you suffer psychiatric injury, you don't come underneath you don't fall within that category of close member of a family. It means you've got to show that you saw the accident or the injury or the actual incident, which is what we would regard as an arbitrary kind of limit on liability. So that kind of inconsistency between jurisdiction means, and from my perspective, and I wrote a paper about this that I published in the Journal of Law and Medicine, is that if you're an insurer and you're trying to insure for certain kinds of risk, the legislation that in the different states and territories, if it's itself inconsistent, will lead to difficulties in predicting risk. And so an inability to find the appropriate risk category to put people in. And I would assume that you would put everyone in the riskiest category to make sure that you're covered as in terms of your bottom line. So inconsistencies between jurisdictions is, in my view, an issue that makes it more difficult for the insurer to be in a position to price their products accordingly and at an economic level. And then on top of that, we have the issues of different approaches to pre-litigation and all that sort of stuff. So consistency across the board would be a massive advantage for insurers, I would think.
Yeah. So you've got the liability itself. You've got issues of, from a legal point of view, you'd call remoteness in terms of whether or not someone can make a claim. Those difference in approach between the different state jurisdictions, are they under legislation or are they under court-made law?
Correct, yes. So that's in the civil liability legislation that was enacted in the early 2000s.
Okay. Has there been any effort made since the early 2000s to try and get a national approach to some of these threshold issues?
Not that I'm aware of. I actually have tried to sort of get a bit of a discussion going with this, writing to the conversation and chatting to colleagues at conferences and so on, but there hasn't, in my view, seemed to be an academic, there is an academic appetite for it, but it hasn't taken hold in any debate, and I think it's one that needs to happen.
So the same with respect to what you referred to as the pre-trial procedures. So the Queensland Law Society gave very strong evidence that, from its perspective, those pre-trial requirements, obligations can be very effective in terms of closing matters out at the earliest possible stage and therefore limiting legal expenses, which has a benefit for both parties and maximises the return to the plaintiff, minimising their legal costs they've got to incur to obtain damages. But it also obviously has a very positive impact for the insurance company itself as well in terms of weeding out the unmeritorious claims.
And for the individuals who get a response quickly to move on with their lives.
Correct. So is there also, so asking you, Dr. Alcock, is there also an opportunity for there to be consideration of how these different schemes have operated over the course of the last 20 years since the last great wave of reforms, if I can put it that way, in relation to civil law liability, and to work out what's worked, what hasn't worked, and then try and come up with some sort of national approach?
That would be a great piece of work to do, and I think that would be very helpful, extremely helpful. A consistent approach of reducing costs and getting quicker outcomes, which benefits claimants as well as defendants and insurers, definitely could be done.
Absolutely. Okay, well that makes sense. I'll just see if I've got any other...
Can I ask one while you're having a look there?
Yep.
I love the country. Australia's a great nation, but it's a federated nation. And the differentiation of law from state to state is something that the different jurisdictions take very seriously. And, we are here in Western Australia, which operates very differently from the legislature and the economy in New South Wales. Is part of the reason that we haven't had the sort of law reform that you're talking about, that it confronts the reality of federalism, and that it is simply a bridge too far to consider that, even if it's in the national interest, the reform that's necessary from a price reduction point of view might be very difficult to achieve. Can you give me your views on that statement, Dr. Alcock?
I think there's clearly an issue of states and territories wanting to do what's right for them, and as they should. The last reforms happened after the Commonwealth Parliament put a panel together to produce a report called the Review of Negligences from memory, chaired by the Honourable David Ip, and in that report, a nationally consistent approach was advanced. Recommendations were made, and the different states and territories went off and did their own thing. That the same realities was confronting them as would happen now. I would suspect if we were to put forward a potential or a set of recommendations for adoption across the country, there's every likelihood that we'd have different jurisdictions doing different things, and at the level of how the law is supposed to operate, each parliament is sovereign, and they absolutely need to do what's right for their own states and territories, and if they've got different perspectives about what that is, then that's entirely right and correct. So I take your point. But in terms of the importance of this issue, I think this is an issue that's going to keep happening, and attempts should probably still be made nonetheless.
Because isn't it, I don't want to put words in your mouth, but I would have thought if Queensland is doing something that's working effectively, and it doesn't matter if it's being done by Queensland or New South Wales or Victoria, the mere fact that you have some sort of national mandated review, and that can be pointed to objectively that, well, this is saving the people of Queensland on every level in terms of progress in claims, in terms of efficiency, etc., that then puts pressure on the different states and territories to respond to their own constituents as to, well, why aren't we doing that here? If it works there, why aren't we doing it here? So there is that benefit in terms of ventilating those differences and assessing progress since the timing of that last report, which was more than 20 years ago.
Yeah,
and
early
work out
2000s,
so we've got
2001.
enough. So enough time has passed. Enough time has passed to allow us to have a detailed reassessment of where we're up to and what opportunities there are for improvement.
I think so. I might further my previous comments that there might be things that are sticking points. So big ticket items like additional limitations on liability that the parliaments in New South Wales and Victoria and South Australia adopted. But there might be some other areas that aren't necessarily controversial, like the pre-trial sort of processes and a range of other things. There might be a number of things that can be done, even if not all the things can be done, which I would see as being of benefit to the country, to the states, and to individuals as well.
But the fundamental, or one of your fundamental submissions that you want us to always keep in mind is we have to be careful in this space to make sure, lawmakers generally need to be careful in this space to make sure any changes which are made are done after careful diligence and consideration of all the facts and the data, correct?
Correct.
Yep. Okay. Thank you, Chair.
Thank you. Can I just ask one before I go to Ms Lawrence, and that is about data poverty. We've identified a few points at which we think information is missing in the public place. Please feel free to take this on notice, but also to supplement the answer you give now. What are the critical data points that are missing for academics to properly research in this sector? And then for those who have less time to think, but who are in the business world, doing plenty, what critical points of data do they need to have, and their representative groups need to have actually have some transparency around what's going on in the insurance pricing?
Well, I can give you my view on that one, and it's something that I've thought about. I've been working academically in this area for quite a while, and having worked in the commercial insurance industry, I was working for law firms in representing insurance companies in these common law and workers' comp claims. Most of your claims are managed commercially. It's a commercial settlement. So the claim would come in from an insurer. You'd manage it as a file, and you have a range of different files, and you work towards a settlement. A settlement is the quickest and most cost-effective way for insurance companies to manage most claims, and a small percentage would get to trial. A very small percentage would actually get to trial, where there were intractable issues. But like I said, that's a small percentage. Most of it would be settled commercially, which only the insurer and the injured and the law firms would be aware of. So, and this is something that has occurred to me over time. It's this difficult data, in fact, almost impossible data to obtain, because there's commercial and confidence issues. The insurance industry can come up with data themselves because they'll have access to that data through their members. The Insurance Council of Australia, for example, I think would have access to that kind of information. But for academics, it's hidden. So we have cases, and again, just because a case is brought doesn't mean that's going to go to a judgment, because often we have settlement throughout the process of litigation, and that's the way it's supposed to work. So you have a very small percentage of a very small percentage that actually end up in a trial with a judgment, and these are cases only with intractable issues, which are not by any means the standard case. So there's a big gap in data, and as an academic, I don't know how to get hold of that data, and so I would be, even if I was to, as an academic, put together a research project to get a hold of that data, I would be speaking to insurance companies first. And I note there is the NCPD analysis of claims affordability by APRA that was 2023. That's one such example of the sort of information that the insurance industry has. But in terms of getting a hold of it as an academic, I don't know how I would go about doing it.
We had a bit of difficulty getting a hold of it as a committee when we were asking questions in Sydney.
Yeah.
You know, we were told we would be getting it from one entity, and they said, no, we don't have that available. And then, you know, there seems to be some pretty significant data gaps even between key players in the industry. And, you know, commercial and confidence is one concern. But when we are hearing stories from our small businesses that they are under-insuring, they can't afford to insure, that insurance costs are being imposed on them, and they have no visibility about where those costs are being determined, but by what observations or what data those costs are being determined. It's getting to a point where small businesses and the people that they employ and those who suffer any injury at work also need some transparency in this space.
Transparency is the issue.
So can I ask you to think about, because I'm sure that you already have to some degree, and the question will come to you in writing on notice, what a sufficiently robust reporting structure might be that doesn't impose a ridiculous regulatory burden or high cost on participants, to make it possible for everybody who uses insurance and needs insurance to access relevant information in a timely way. We've already asked some questions, and I believe we've got a response on notice to what about the ones that are settled on the process through that don't quite get to the court. But what critical pieces of data need to be in the public place? Where would they be located? How could they be protected in terms of commercial and confidence? And what impact could that then have on price? Or is it a wasteful exercise, a vanity project? If you can, think about those things, Dr. Alcock. I'll go now to Ms. Lawrence.
Thank you, and thanks so much for your submission. I think it's a really vital part of the discussion in the inquiry. And I think that sort of counter narrative to, as you say, the Insurance Council is promoting around trying to, in their perspective, get some balance between the physical payout of a claim versus the psychological claim. But so so take what my challenges to you in the spirit which is intended, which is to try to unpack this further. So my understanding is that for like a psychosocial claim, we're looking at now an average of around 35 weeks. The costs can be 4 times greater than a physical claim payout. So if it's a $10,000 physical injury, and we've got the a hospitality session coming next, where there's potentially harms caused to staff in the workplace either through customer service or whatever. So these are real issues where there might be a physical issue and a claim made, but then you have the psychological impact, which could well be in excess of an injury, physical injury incurred. So taking account of this as a genuine issue that you're highlighting, how, from your research, have you found that there can be some measure of balance? So the Insurance Council, as you said, is saying you can only claim one or the other. Do you suggest that there's other factors that could be considered? I think New South Wales, for example, has said you can only claim a psychological claim within 12 months to prevent that long tail happening years down the track. Is there factors like this? Back in the 2002, we had limitations around no fee, no win, the indemnity forms carrying weight. So are there other measures, structural changes that you can think that would then create some balance to ensure business are not have some unlimited exposure to psychological claims?
It's a really good question, and there's a few layers to it. There is a narrative that exists, and it has existed. I remember it when I was at law school, when the first insurance crisis, inverted commas, was happening. The narrative being that claims are out of control, that psychological claims in particular were out of control. That was the primary driving factor of insurance going up, and so the only sensible thing was to put limits on those claims. And I think that there's a part of that narrative that is true in my view, but it's not the complete picture. And so and we found out through research that was conducted following the early 2000s changes in law that some of those narratives were not borne out in the data. So there was some really important research done which showed that insurance companies were suffering losses in other ways that had nothing to do with these sorts of claims, and that the numbers of claims and the sizes of those claims, actually there was no sort of huge explosion. So that's one thing that has, for all the academic lawyers in my area, has been quite a frustration that that narrative was allowed to play such a huge role in then parliaments taking the decision to limit liability in ways that were unfair and arbitrary, and have led to some unfortunate outcomes. So I don't wish to say that narrative is not correct this time either, because I don't know. I don't have that data myself, but I just want to get on that issue of transparency, of wanting to know whether there is an explosion of claims, whether there is an explosion in the size of claims. So that's one level, and then at another level, obviously the law needs to function in an economically sensible way. There's no point having legal settings which result in economic dislocation through availability of insurance or whatever other different context that could happen. But it's important to also think of this at the level of the economic theoretical perspective of how the law operates. So the law of negligence, from the economic theoretical perspective, operates to ensure economic efficiency. So that's another perspective that needs to be perhaps thought about, and that may be a little bit much to talk about today, but I have a piece of research on that very topic, if the committee would like that piece of research. It shows how it shows how the law adjusts its settings to achieve economic efficiency. So, and that then relates to how insurers are able to insure and have their bottom line protected. So it was my paper, which I actually have here, was looking at the civil liability legislation in light of the claims that there was a decision called the Wicks decision, which followed it was the first High Court case which considered the civil liability legislation which had been enacted in the early 2000s. And the High Court took a perspective which was criticised by some as not protecting insurance markets and not sitting with the spirit under which the legislation was enacted. And so I produced this paper, which was based on research into the economics of the law of tort and how it achieves economic efficiencies. And I think that would be of some assistance to.
So can I just ask then, just to tease that out? So just so the couple of examples I gave, so back in 2002, in that period, there was the strengthening of indemnity waivers, for example, so they had legal standing. Up until then, I think there was the prevailing view that they weren't worth the paper they were written on. There was the change to Good Samaritan protections. There was the change where advertising of legal services in hospitals and so on to try and address there was a prevailing view at the time that the increasing litigious nature in the US was starting to find its way into Australia. Does that paper that you're referring to then talk to the extent to which those measures and I think there were caps as well.
Caps and thresholds.
Yeah, and thresholds, correct. So does your paper then speak to the extent to which that then played out in terms of insurance affordability, or is it just more about the principles, about the ability of people to make a claim? Because I think there is a suggestion.
It's
the latter?
It's the latter.
Okay.
I don't think those, from my perspective, I'm plugged into the academic world of tort lawyers and academic teachers of law in this area, and those aspects of the law that in the changes, the Good Samaritan changes, the advertising, those were less controversial. I don't think apart from caps and thresholds, which are quite controversial, the other changes that were recommended, I don't think gained much, if any, criticism from my perspective and from my memory. The criticisms were in relation to the legal principles, and that's what my paper is focused on, just the legal settings, if you
So
like.
there is, though, a suggestion that a lot of those changes that were introduced have now been eroded with time. It's been a couple of decades. So, for example, you now do see no win, no fee advertising, or to encourage people, obviously, to litigate. So, given your concerns around the erosion of the principles, though, does that correlate? Like, given that there's been,
It's an interesting suggestion, and I've always found that suggestion quite curious. The idea that we're encouraging a litigious approach. If you look at it from a lawyer's perspective, if there's no claim, there's no claim. If someone's not injured, they won't have a claim, and if they have been injured, they may have a claim. And the fact that they may choose not to bring a claim is sort of seen as maybe a positive thing. But I'm an academic lawyer, and I think if someone has a right to claim, they should claim. They've been wronged. Now, what we don't want is encouraging unfair claims or unjustified claims. So you'd hope that the system would operate. And having been in the lawyer's chair, getting claims from people, because I was representing commercial insurers. When you get a claim that's not very strong, you don't offer much in settlement, if anything. So in terms of unfair claims making it through and resulting in costs blowing out, I guess I don't see how that happens.
okay. It's a very
interesting and resistant reading to some of the evidence that we've received, and certainly some of the evidence that's been populated in the public place. So important evidence for us today. I've asked you to take a question on notice because I'm really mindful of working collaboratively with my colleagues here to advance solutions that really are in the national interest and don't impose undue cost into the sector. If there were one, you've raised awareness of particular issues, but if there were one or two key recommendations that you would advance, if you were sitting here in the committee in our rooms in discussions, what would the critical recommendations be that you think would benefit the nation? Dr. Olk.
That's a difficult one.
No pressure.
No pressure.
And feel free to, send us something on notice if you wish, but what are your first thoughts?
My first thoughts is that the law needs to be principled but predictable, because predictability was the issue that was raised in the first round of the insurance claims issue, is that the law was unpredictable. It was unpredictable, which made the provision of insurance uneconomic. So, if that's one of the goals, I think it should be one of the goals, is to make the law predictable for insurers to then be able to manage the different levels of risk that they have on their books. So if that was one of the goals, then having sort of different approaches across the country really isn't going to help much in that respect. But the second thing, I would hope that the law would also be fair and what we might call just.
How do you then
Mr. Bockholz.
Thank you, Chair. How do you then circumnavigate those nefarious legal practitioners who circumnavigate the law and will proceed with a claim knowing that they only want to get to the top of the steps of the courthouse, where the law then becomes a point of separation from the claim and the law is no longer required? I think we're seeing more of those because we've got differences of opinion. The Australian Insurance Council are saying the industry is becoming far more litigious with the claims that are being played out, and the Australian Law Society saying the claims just aren't there. So we're getting conflicting evidence. Is it the law or is it the appetite of the legal practitioners for a payday?
Well, look, it could very well be, and I simply don't have an answer to that question.
And this argument's been put all of the time, and I know in the papers over the weekend there was some discussion about what's happening in Victoria, which has become a site which, litigation funding is advancing, and they talked about, an upswing for a period of time and now a decline to what's becoming a steady thing. So this is the core argument.
This is where transparency becomes a key issue going forward, because I don't see that this debate changes. We could be here in 20 years having the same debate without information. So transparency.
Sorry.
Interestingly, though,
Dr. Olcock, I guess the problem is less whether we're here or not, but more that the jobs are here and the businesses that provide jobs are here, right? Because small businesses drive the economy of this country and they create jobs everywhere, regional, cities, periphery, everywhere. So, we have to make sure that there is great employment for every Australian, and not everybody can be an entrepreneur, but we need to have enough of us who are entrepreneurial and can manage, I guess, the legal responsibilities as well as the financial responsibility of providing proper insurance. So, please, if you can answer in that light.
well, I share that, and the law can't operate without insurers. The law requires the insurance industry to be healthy, as is the economy. I'll have to take that on notice if
Please.
that's okay.
We'll send you questions on notice, and I want to give you the opportunity to table the document to which you referred. The Secretariat will come and take that from you if you're happy to hand that over. And move that way, Ms Lawrence, that we accept as tabled the academic article by Dr Alcock.
Yes.
And I believe you have a follow-up question.
Yes, thank you. So just to the Chair's question about what would be the big change that you would suggest we consider, and you spoke to predictability. And I just wanted then to circle back to your earlier comment that around the concerns with the introduction of the thresholds and caps. And where, to the extent that that was a design feature to introduce some predictability around pricing, and whether that is something then that you would still put caveats around perhaps revisiting to see how it can be explored against more classes of insurance, or whether it's introduced some new issues and into the system.
I think my understanding is as to the operation of the caps and the thresholds is again a purely academic one. So I have to put that limitation on what I can actually say about it. But I've written a book on remedies and the sorts of damages that come in these sorts of claims, and I teach it every day. And I'm chatting with academic colleagues about it. And what I can say is that the damages that people get for their injuries, the principle is that we put people back in the position they would have been but for the injury. That's the general principle. And with all because the law places lots of limitations on that as well, so many limitations. And then we add the caps and the thresholds. There's so many ways that their damages get limited. I think there's this perspective that damages are inflated. If you look at what people actually get for their injuries, at least this is from my academic perspective, that they're not put back in the position they would have been, but for their injury. Certainly not, even though the law intends for that to happen. In our common law development of these common law principles, the courts recognise it's not always economically possible, which is why they place lots of legal doctrinal limits on the extent to which you can claim damages. But nonetheless, that's the general principle. So, again, my evidence becomes a little bit limited. It's only limited to the academic perspective. But, and this is some work that I want to be doing in the future, which is looking at particular cases in depth and seeing what people actually received versus the loss they've actually suffered. And I think we would get a very different perspective about what people's lives are like after these injuries. There's a perspective, I think, that people are having a payday, and I think people are left in pretty bad circumstances with money that's supposed to pay for their medical bills, for their loss of functioning in their employment, the loss of functioning in their activities that they would usually do, and I don't know it always is able to cover any of that certainly not all of it. So it's a limited answer. I'm sorry if it's not a full answer, but limited to the academic understanding of
Thank you.
the issue.
Can I thank you very much for your evidence, Dr Alcock, and I think your last response there to the question from Ms Lawrence calls us all to seek to disrupt the narratives that divide us. You know, this positioning of one who pays and one who gains. You know, a workplace injury there's very little gain for anybody who's involved in that.
Yes.
And that, you know, businesses need to survive and injured workers need to be able to move on with their lives as well. You know, as Australians, we're all in it together. We've just got to find a way to move forward that is sustainable for all of us. And those key words that you use, predictable and?
Consistent.
Consistent. I think it was predictable with those two words. Predictable and consistent, yeah. So thank you for offering those words to us, Dr Alcock.
Thank you very much for allowing me
You
the
have
opportunity.
taken some questions on notice, and if you could provide responses by Monday, the 17th of August, that would be much appreciated by the committee.
So Chair, just to be clear, I can't remember if you took on notice. I'm interested in your views with respect to the Queensland Law Society's submission. If you can have a look at that,
I will.
it'd be helpful.
Thank you. Thank you.
Thank you.
And I call forward our next witnesses from the Australian Hotels Association, Western Australia. So that was good because we can't get into the place down the road pre-order. We've just got to go and take your chances, and by the time we get there, it'll be too late. So we just pre-ordered to eat here.
Okay.
Right?
Mr. Woods.
Oh, how are you?
Oh, hey, brother.
Nice to see you. Paul?
I still can't believe you left Queensland.
I know.
So I've known Mr. Woods for quite some time.
Nearly 40 years.
Yeah, 40 years, Chair.
I was just calculating it before.
Oh, were you?
Yes. Well, I was thinking it's close, 3 years off 40 years. Yeah.
Okay. The committee will recommence, and I thank you for being here as representatives of the Australian Hotels Association, Western Australia. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you both. For the Hansard record, will you please state your full names, the capacities in which you appear today?
Bradley Woods, CEO of the Australian Hotels Association, Western Australia.
Angela Beachy, the Australian Hotels Association, Western Australia, Government Relations and Communications Manager.
Thank you for being here. I invite you now to make a short statement, and at the conclusion of your remarks, I'll invite colleagues to ask questions.
Thank you. Chair, committee members, thank you for the opportunity to appear on behalf of the AHAWA. We represent hotels, pubs, hospitality businesses, small bars, restaurants, licensed tourism venues across Western Australia, an industry employing around 100,000 people. The committee has heard, and I've looked through the transcripts, you've heard very strong stories and a lot of detail around the question of affordability from a number of industries, and I doubt we can improve on the telling of that. But what our members are saying to us is that availability and competition are core to the affordability factor, and in fact they're almost an equal level of concern. So I want to use our brief time today to focus on two things. One is the availability, what availability failure looks like for a licensed hospitality venue, and which of the solutions already put to you we're prepared to back and support. From the outset, we're not saying hospitality is low risk and we're not looking for cheap insurance. That's, not the issue. Our members accept that risk has to be managed and premiums should reflect that genuine risk. Our submission is that a growing number of businesses can no longer obtain insurance that reflects their own risk profile from more than one insurer, and in some cases from no insurers at all. Earlier in the year, in February, we conducted a qualitative survey of our members, and those results found that 75% can receive 2 or fewer quotes at their most recent renewal. Of those, 38% of the whole received 1 quote or none at all. And that's particularly concerning in those catastrophe zones, and it reflects a market that is not competitive. Separately, in relation to other areas of questions, 37%, the only quotes that were available, 37% said that the only quotes available were at a price they could not afford. That survey is indicative rather than statistically representative, but the consistency struck us that through metropolitan, regional and remote areas, large and small businesses, the answers and the sentiment was the same. Members told us also that changing brokers made no material difference. Multiple quotes through multiple brokers produce materially identical outcomes, and members read that as an absence of competition. Unfortunately, we can't test that. We don't have access to that data. Possibly the committee can, but the chair has already recognised that sometimes data is not that accessible in this sector. But where you do have the power to require that data, I think that is extremely valuable for the committee to do that. A licensed venue in WA is required by law and licence conditions to reduce risk in very specific ways. Responsible service of alcohol laws, liquor licensing legislation, regulations, departmental guidelines, the way in which we have to ensure that we have training, approved managers, approved crowd controllers, CCTV to licensing and police standards, incident registers, venue management plans, all require our members to have those those conditions and those, what would you call them? They're preemptive precautions, but also regulated controls in place. They pay for...
Your risk mitigation strategy,
correct.
Their requirements to deal with that.
Yes, correct. And they pay for all of that. However, none of it appears, and there's no clarity in the way in which it's recognised or reflected in their insurance policies. So the more they do in that regard, there's no recognition in terms of premiums or even acknowledgement of insurers. And we've explored in the past the way in which we can establish standards, protocols, guidelines for our members to try and implement those services and standards with a view to trying to reduce premiums. But we've been told continuously by the brokers and then the underwriters that it's a totally separate equation. The way in which they underwrite risk and they look at those types of requirements are different because they're legislated or regulated requirements. There's a sharper version of that problem that members report that public liability policies increasingly exclude or sublimit claims arising from assault, battery, or the actions of security personnel. The state requires us to employ crowd controllers. The state requires us to manage intoxicated persons. But then the market declines to cover us for doing precisely what the state requires of us. These costs are not absorbed by the business alone, and more than half of our members surveyed they'd increased prices to customers, and nearly a third have delayed investment, and another third are carrying a higher level of uninsured risk. Lenders require cover, so where cover is unavailable or uneconomic, sales obviously fall through. For an older owner in a regional town, their pub is a retirement asset that can't be realised, and a town effectively ends up effectively potentially losing its hotel. We support the proposal put to you on the 16th of June by the Australian Consumers Insurance Lobby that insurers collectively establish an underwriting facility for hard-to-place risks, sitting behind the commercial market rather than competing with it, widened, as it was raised on that day, to a co-contribution across insurers, the states, the Commonwealth, and obviously the beneficiaries. The WA hospitality industry is prepared to be part of it as a contributor, not only as a beneficiary. We support a sector-agnostic framework under which any industry demonstrating market withdrawal or lack of competition may establish an accredited mutual. It needs establishment funding, which could be a repayable loan rather than a grant, or a statutory recognition that satisfies insurance requirements in licences and leases, permits and finance covenants, because without those last elements, it fails at the bank's front door. We also have concerns about fraudulent and opportunistic claims and procedural fairness where liability is disputed, early notification of injury, evidence preservation and prohibitions on claims farming modelled in the claims farming modelled in Queensland's provisions would improve the quality of claims for genuine claimants as much as they protect operators. Our ask is this: to examine competition and availability in small business liability and property insurance for higher risk industries, and require the data that would make an examination possible. Our members can't themselves see how their premiums are set, or how insurers are approached, how many decline, or whether there's anything they can do to further reduce the risk that makes a difference to what they pay. And having clarity over that and line of sight over that would make a huge difference. Thank you, and happy to take your questions.
Thank you very much, Mr Woods. I'll go to the local first. Ms Lawrence.
Thank you. Lovely to see you again.
You too.
Thank you so much for the time, and particularly for putting the effort into providing case examples. I think that really helps illustrate the difficulty and no doubt the stress this is causing so many of your members, so thank you for that. I thought it was very interesting you describing that members don't understand how their premium is constructed, what measures they could do further to reduce that risk exposure. And I just wonder whether they understand then what their policy actually covers. So if we take public liability, for example, do you, I mean, it's obviously a broad question, but do you think there's a great or excellent awareness of what the exclusions are? And
I think the product description documentation does that, and most good brokers would outline that and explain that to their clients. We're not suggesting insurance underwriters or that brokers don't do that, but I think that identifying then ways that they can materially reduce their risk, but also demonstrate to the insurer that that should be taken into account in relation to the premiums, is the key nexus. Usually it's if you don't do this, then you can't be covered, as opposed to these are the core requirements, but here are a range of additional requirements that if you demonstrate and fulfil, there is opportunity for discounting and or better provisions for that premium. And I think that's where the market and the businesses that are concerned are looking for ways in which they can materially demonstrate what they're doing to try and mitigate risk, but also demonstrate their provision to the broader community as well.
so if we take a scenario where, I'll use a terrible example, drink spiking. If the perpetrator of the drink spiking is identified because the hospitality venue has CCTV, or they're a staff member perhaps, like a warning to the person, we don't drink it, we think someone's just put something in, so they've done all the right things. Or in a worst case scenario, this person does drink it. Who does that individual that's now got an injury make a claim against? Is it against the individual that did the drink spiking, or there's criminal issues there too, or are they then making a claim against the venue? Because I'm just trying to understand, like, what is the venue insuring against when you've got individuals either taking violent acts against another patron or whatever, or maybe inebriated, fall down the stairs. Like, what level of responsibility falls on the perpetrators versus the venue in terms of responsibility?
You want Angela addresses that?
Ms. Beachy.
In that situation where there's a criminal activity involved, that would be on the individual rather than the venue, because it wasn't the venue's responsibility. However, the latter example that you made of being inebriated and slipping down the stairs, that does fall on the venue. And quite often there is that blurry line because alcohol can be related, it is a higher risk area, and there needs to be a certain level of personal responsibility and patron safety when that comes to it, because quite often that will be the case where somebody does hurt themselves, potentially doing something that was silly on their own behalf, and they then go and make the claim to the venue. The CCTV example, a venue is only required to hold on to that footage for 28 days. However, you can make a claim against a venue for far longer than that period of time. So quite often if people...
How long?
I believe it's up to 3 years for a public liability claim.
And does it vary from state to state? Or jurisdiction to jurisdiction?
So, yeah.
I think so.
Maybe take that on notice, yeah?
Typically it's 3 years.
Yeah, it's much. So that's then an issue where there's then no proof, because venues aren't keeping 3 years of security footage because it's just, there's too much there to go through, and they only have to present it when requested by police as well. So that is one of the issues, is that then when it comes down to the investigation, it is the business's word against the claimant.
With indulgence, can I just ask a question, perhaps to tease out the issue which I think you're raising? So I go to a pub, I'm assaulted by someone, I suffered harm. As I understand it, there have been claims which have been mobilised that say I bring an action, obviously, against the person who caused me harm, who punched me or whatever, but I might also allege, well, the hotel should have evicted that person 2 hours earlier because that person had engaged in offensive conduct, or the hotel should have been aware that they shouldn't have let that person in because they might present a threat to other patrons. So there's this, so in your example, there's the perpetrator themselves who's committing the offence, criminal offence, but then the context in which I, advised by lawyers, are trying to seek compensation for the harm caused to me, could be, well, there's that person, but there's also what did the hotel do to prevent that harm being caused to me, should they have excluded that person in some way? Is that sort of the scenarios you're seeing?
Your observation's correct in that there have been cases held in relation to different forms of injury that there was a liability connected to the venue for a range of sort of vicarious activities, and some of it may be lack of activity. For instance, knowing that someone was intoxicated and not removing them from the premises, etc.
Or out of service.
Correct. Yeah.
Would you then have data on the extent to which members are having to pay out through their insurance a claim? Like, do we have a sense of the extent to which a claim is made against a venue, just to kind of get a sense of where is the risk sitting and then who's doing the payout?
In the ideal world, yes, but we don't. Part of the difficulties with surveying members is trying to obtain this data is just their cautiousness around confidentiality in their own policies, issues of law, the usual sort of apathy around any sort of survey. So part of this surveys that we did were quantitative but also qualitative in contacting members or groups of members to get information. I've never seen anything published like that, and I don't know if you've...
No, but anecdotally, some of the feedback we've received is that a venue will try and sort it out without going through the insurance system because they don't want to risk their premiums going up exponentially, which in our submission, some of the examples were in there of, there was one that was 10,000 to 40,000 because there was one claim within the year.
Yeah, it's very fraught. Like, it's very difficult because you can understand why insurance companies will want to just, put a premium on every risk conceivable. But at the same time, you have a business to operate and there's so much where the onus has got to be shot on the individual, but then still taking, like the previous witness was talking about, but if there's a claim, in his view, he was suggesting there wasn't the frivolous claims that I think you're suggesting you are seeing frivolous claims being made.
Which is why the Queensland model of reducing that ambulance chasing approach or the farming makes a lot of sense.
Is it working though?
I don't know the answer to that.
Can you take that on notice from your Queensland branch, please?
Yeah.
Thank you. Back to you, Ms. Lawrence. Last question.
Yeah, look, I might just circle back because I'm just trying to soak in what you've just been explaining, which I think is quite concerning. But it's trying to find a pathway through.
Thank you, Mr. Bullhall.
To continue on, thank you for your evidence and the work that went into the submission. You serve your members rightfully in this space because insurance is such an inhibiting cost in the hotels game. I just want to understand a few things around Mrs. Lawrence's line of questioning, particularly around, are you seeing an increase in litigious behaviour in Western Australia in hotels?
Anecdotally, my honest...
Not workers' comp.
No, taking workers' comp out. I'm talking about public liability, etc. Anecdotally, a small measured increase, but nothing that is statistically sort of obvious. What the problem is more for us is around the insurance availability and getting competitive quotes. That's where the problem's occurring more.
The timing of those, on the eastern seaboard, we had those illegal liquor distributors, the bootleggers, firebombing properties if they refuse to take their product. Any direct effect in insurance on this side of the country as a result of those actions?
Nothing that's been specifically quoted or referred to.
Okay.
What we do hear about is a cyclone in Queensland.
Yep.
Or a flood in northern New South Wales or something. And that comes back quite often in terms of general insurance premium increases as to national risk and national underwriting. And of course, it's a global market as well.
Weatherboard properties, hotels, older, are they assessed differently to properties constructed other than timber? I mean, I remember there was a period of time in the hotel industry where if a property sat there, for sale for a prolonged period of time, there was a high level of coincidence that a red steer would go through it and an insurance claim would be paid out and the pub would never get rebuilt, licence transferred off somewhere else. That was evident. Did that have any causal effect on insurance premiums that we deal with today?
And it still is.
Yeah.
And in terms of those properties, you're talking about wooden frame.
Yeah.
And so that risk is still being quoted as a rationale for higher increases. And it just seems to be on an ongoing basis unless, there's been a total rebuild of a property. And in parts of the state where you're talking about very remote locations, cost of refabrication, cost of getting supplies to is extremely difficult. So quite often, they're making the most of wear and tear over time. And those traditional pubs and hotels.
They're the ones I like, the old
Yeah.
Got a bit of atmosphere.
And there's heritage and Federation, value to them that you don't want to necessarily damage, destroy or change as well. So your observation is correct. It still is impacting on regional WA.
And my last question is from a scale perspective. Do you see any discrimination between a family-owned operation, because in the hoteliers world, you now have large corporates that may own many tens of hundreds of hotels across the country. Do you see any discrimination between how the assessments with insurances, how they're valuing risk in two properties side by side?
Look, can I put it to you this way, is that those large corporate conglomerates and or large groups of hotels, it might be a family group of 8 or 10 hotels, it could be a large conglomerate of 30 or 40 hotels, have a lot of advantages in their ability to either self-underwrite certain elements, but also to negotiate better premiums and demonstrate consistency of management process, procedures and practice. So the complaints that we're hearing in relation to accessibility to insurance in underwriting, as well as cost increases, are predominantly coming from the individual sole owners. And WA has the most number of individual sole operators of pubs, taverns, bars, that type of market than any other jurisdiction, mainly because we don't have poker machines in the state, so there isn't the same genuine interest in owning multiple versions. But what we are seeing is consistently those individual operators, those smaller 1 or 2 family businesses are the ones that have the most concerns.
Okay, thank you, Chair.
Thank you very much. Senator Scarr.
And Mr Woods, at the same time, those small family-owned pubs, if I can put it that way, can in many cases be absolutely central to the cultural operation of a small town in terms of providing a venue for people to come together, to meet, to celebrate, to console, to maintain the identity of the community. Is that correct?
Senator, your understanding of the regional country pub is spot on, particularly in smaller towns where it's a centre of providing of food, beverage, accommodation for travellers, an employer of locals, a provider of services for weddings, birthdays and wakes. And of course, as some of those businesses, and we've seen throughout the state in some towns where hotels have closed altogether, and they've cited insurance costs and elevating costs of insurance as part of the rationale, it does have an impact, and local communities do miss out as a result of that.
Yeah. So you've made the case very well. I just want to drill down into the solution, which I think touches upon a number of ideas that have been ventilated, including by, for example, the amusement recreation industry. And I can say in our Queensland hearings, we heard from the Caravan Association, Park Association, that there was a couple in their 90s who own a caravan park in North Queensland who have been unable to sell to retire because their potential purchasers can't get insurance on affordable terms, which had echoes, Mr. Woods, of the example you gave of elderly publicans wanting to exit, but potential purchasers can't procure insurance, so they're almost, it's like a stranded asset in that context.
There's a mirror situation happening there.
Yeah. So walk us through in detail how this proposed solution would work, so we can really understand this.
Look,
and who needs to do what to make the solution work.
I think the first one is the proposal put to you by the Australian Consumers Insurance Lobby around establishing a collective underwriting facility for hard-to-place risk.
Okay, so let's just hold.
Yep.
A collective underwriting facility for hard-to-place risk. What's that mean?
For those businesses in parts of Australia that are being regarded by insurers as too high a risk for them to even offer a quote or to underwrite eventually. So where our members are most frustrated is the number of quotes they're getting from their brokers have been reducing over time. To the extent now that 37% or more, 37% are saying out of the survey that they can only get one quote or none at all. And so in any market where there's market failure and you don't have that offer of competition, it's concerning. I think the industry, the insurance industry is certainly acting commercially to go, well, this industry is too risky and therefore we're going to pull out of that market. 20, 30 years ago when I was first involved in the AHA, but over East and then here, it was a much, much stronger national market. There was a
So this is an avenue for this collective underwriting facility. So how's this going to work?
I think, and I don't want to try, I'm not in the insurance industry, but certainly as ASIL indicated, sitting behind the commercial market, not competing with it, widened as far as it can be in terms of co-contribution across insurers, where the state and the Commonwealth can feed into it, across multi-sector industries, not just our industry or another particularly at-risk industry. As an example, we examined trying to set up a mutual for our members collectively throughout the state about 4 or 5 years ago.
Yeah, so very interested because I would have thought to some extent that given the number of members, that might have been an option. So very interested to hear what you, and if you could take on notice to provide further details.
I'll do that. We used one of our local brokerage firms to assist us in the process because they have direct relationships with underwriters out of London, and they were the underwriters out of London were willing to examine looking at the market. The biggest problem we had was access to data. We had a small sort of, I suppose, a couple of dozen members that were able to provide information, but it just wasn't enough depth and specifics for them to be able to go away and create a model or a competitive product that would serve what we need. And in the end, it just was that lack of data, that lack of information that was at the forefront that we could access that meant that they couldn't really come to the party. Now, I'll get more detail on that in the follow-up to the question because I think it's important to demonstrate as an industry we've tried it, we've been told it's possible, we've gone away, it took about 18 months to do as much as we could, but in the end there just wasn't enough volume and depth to the data that was needed for them to create a product.
So can I clarify, when you were doing that work, was there the potential threat to other insurers that you would operate as a collective in the whole of the state, or were you seeking a model just for the thin or non-existent market?
It was both. It was for those that wished to participate. So we would open the doors to any of our members that wished to participate. It would operate in a mutual sense, as a not-for-profit mutual sense, but obviously there'd be reserves to cover. But at the end of the day,
so I guess who was attracted to this? And the problem is your market just so loaded with higher risk, and other people dissuaded from moving to a mutual?
The underwriters were less concerned about the risk than they were about getting the level of data needed to put the commercial product together. They knew the risk, they knew the cyclone circumstances in the north, they understood fires are a reality, laundries and kitchens catch on fire, those types of things. But at the end of the day, what they didn't have was enough depth of the data to actually create the commercial model. And so at the outset, that was our thoughts, was that, is it too high risk? But the conversations and representatives, and I just can't remember the name of the company that we met with, but through the research I'll come back to you with that detail. But the people from London were certainly willing to examine it, and they came out here, they met with us, met with a number of industry representatives. So the model and the option for a mutual is there, but what is missing, you need the capital up front in terms of everyone has to write a cheque for a certain amount in the process. And that's where there's a need for potential government support in establishing that, whether it's through a payback loan system or however it's funded. And to your point, Senator Scarr, that's kind of, and I'm not in the insurance industry, so I am kind of creating a model here based on what the advice has been.
No, I understand, and we're going to hear further from the Small Business Ombudsman, who's particularly looked at this issue in terms of the amusement, if I can put it that way, industry. And it seems to me one of the benefits of that mutual model is you can place obligations upon the participants to operate at certain standards. So you're not dragged down by recalcitrants or those who are fly-by-nighters, etc., who are the minority in any business or context. So you can sort of leverage the benefit of all participants in the mutual having confidence that everyone participating is using the best practice in terms of mitigating risk,
Yes, correct. And that was part of the protocols that would have been established to meet those thresholds and those expectations as part of the entry.
And you can also, in terms of that initial seed capital, so some of the evidence, Chair, we received in Brisbane from, for example, the caravan industry, amusement parks, and similar, was the initial seed capital isn't that much. It's just to assist the establishment of the fund. And then you say, as members pay in over time, there's an opportunity for that capital to be returned. To the states and the Commonwealth government.
And that's our understanding of how it would work. The ASIL model is a bit different. It's not an open competitive model. It sits behind the market as we understand it. So it's not competing directly for commercial underwriting. And it is focused on those higher risk industries. But I think having it broader than just one sector is very important. So that it's shared collectively.
In situations where there's objective evidence that the market is failing, and the evidence of that is someone conducting a lawful business which is contributing in a positive way to a local community is unable to obtain insurance at all or unable to obtain it on objectively competitive terms which allow them to continue to operate.
Correct. And I think when you have that opportunity to speak to the Small Business Commissioner, the question of community events and not-for-profit events is a good one in relation to public liability access as well. That has been an inherent problem for decades now, and so some events either cease or don't continue because of inability to access, particularly in regional and remote parts of the state.
Okay. All right. Thanks very much.
Pleasure.
Thank you very much. The model that you've been discussing deals with the issue of inability to access the product. Could you mentioned in your opening statement a number of parties to the establishment of that mutual fund, some to stay, some to potentially be paid out. So the government obviously is clearly one there. Then you've got the individual entities itself. Who else? Did you mention the banks?
I think
who else?
Insurers could potentially be looking at this as a community contribution, as a contribution to the goodwill of the nation in relation to a small contribution that they could be making in relation to setting up these types of support models for sectors that are finding it difficult or almost difficult to obtain insurance. Whether we call it a tax or a levy or whether we call it a voluntary support contribution, I think there's a question of social contribution and goodwill as to whether insurers and underwriters in Australia are willing to contribute in that regard. Banks obviously have expectations of businesses to continue to have the business insured. Whether or not they're willing to also potentially contribute in that regard is a very good question, Chair, and you know, in the ideal world, one would hope that they also see a broader social value in doing that. And do you have any? I think, as you mentioned, governments potentially do. Obviously, the individual businesses or those that are being insured do. I think broadening the contribution as far as possible is an option. Where there are community levies of some type or form that can potentially contribute to this, through various charitable factors or social causes that may wish to actually support an underlying effect that protects the public and supports a public outcome of that there being insurance for someone who is injured when it might not otherwise be there, is an important consideration. It's not just about the premium for the business. It's not just about the business not being able to afford it or it being too expensive or hitting the bottom line. It's not that. It's ultimately the consumer, the individual who goes onto the premises, who is at risk, who potentially hurts themselves or has an injury, and if there is no insurance in place or inadequate insurance, they suffer as well. So the contribution that, say, the insurers or banks would provide is not just about the business sector winning, it's about the whole community winning.
Would you have any objection to such a contribution being optional, perhaps for patrons themselves? You know, to keep the pub going in their local community, if everybody put in $100, we could keep it rolling, right? Along with others, or philanthropists, or non-government organisations, or indeed local councils.
You know, I think your observation is a good one because it's about a whole of community contribution. The patrons obviously already contribute through what they're spending within the business, and every, you know, middy of beer has an element built within its cost factor that also covers insurance as well. A separate insurance levy for participants could be difficult. A community-owned pub might be different, and there are some examples of community-owned pubs in WA, but I'm not aware of any that have an insurance levy or contribution. But certainly, consumers and purveyors of you know, accommodation, food and beverage contribute through what they spend.
I'm thinking about a pub
Yep.
up in the Kimberley.
Yep.
That's, you know, on its last legs.
Yeah.
And I'd be in there buying my beer and paying my little bit of insurance, and if it was going to cost me $200 a year to keep the pub open, I wouldn't be thinking for a moment that I wouldn't pay it.
And
right?
I think,
you know what I mean?
And I think in some smaller communities where there is a community pub or the operator's faced with the threat of it closing, there's enough goodwill out there for that to potentially be a success story.
But they'd want to know that that's actually where that money were to go to. So there would be probity requirements around setting up any such structure.
Yes. Chair, I think that's important, that transparency for the consumer to know that they're contributing, that there's some sort of audit trail to demonstrate that it goes directly to the insurance.
Yes, we just got to make sure the auditors are on board with the ethics of all of that.
The Chair has a very considered focus on auditors.
Sadly, I just wish I was something that I didn't have to think about, because we all want trust in the system everywhere, right?
Yeah.
Could I just give you the opportunity to take us through the 7 recommendations that you've made and emphasise anything that you haven't so far put to us? Sorry, just before we do that, can I backtrack and go to a matter that Ms Lawrence was discussing with you earlier? This is these problematic anecdotal pieces of evidence that are on page 2 of your submission to us, submission number 32, where you've got members saying, I'm fed up with paying for risks in North Queensland, California and Papua New Guinea. I mean, yes, of course you can be, but there is a global impact, right? You can't get that one. Then you get the one about not being able to, the industry's fundamentally broken, like these sort of despairing narratives. And the blaming of litigants. In the absence of data, the anecdote reigns, but it doesn't provide us with the facts, right? And I know that it's very fashionable to live in a fact-free world, but it doesn't lead to very good government policy. So,
Is there, sorry,
yeah, yeah, you're probably going to ask the same question. Is there any way we can actually get the data that in a way that is efficient and not problematic? Because, you know, I can hear this person who's up to their eyeballs going, like, and I hear what they're saying, but there's a lot of emotion in that, and that happens when you're under pressure.
Yep.
I don't want to put anybody under more pressure who's under pressure, but some way has to be found to actually get the data, right? What does it look like in your industry?
The data is owned by and predominantly held by the insurers. And I think the shortest pathway to getting the types of information that you're referring to is to mandate required reporting by the insurance industry to provide overarching information to the type that you're referring to. In our sector, and
To whom?
To
And how often?
Yeah, and this could be on an annual basis to an organisation like APRA to collectively provide, and these days of AI analysis of data, it's not impossible, and it is a very cheap and efficient process of doing it. As an example, in parts of the state where alcohol restrictions apply, our members have to provide recorded information to the Department of Racing, Gaming and Liquor on their annual or biannual liquor purchases of every single thing they buy, who from and the quantities.
And their inbuilt management systems within their own business, it collects and provides that data accordingly.
Depending on the sophistication of the business, sometimes it looks like a bunch of papers that they've physically got to work through. Others have a bit more, spreadsheets and other information. But at the end of the day, that type of information has to be recorded through a legislative vehicle.
Is that the sort of thing where your industry body could actually seek and provide software that would enable this to happen efficiently across businesses instead of individual businesses trying to build this from the ground up?
Well, I think in the example we're talking about insurance, the larger insurers and underwriters have that information at their fingertips. The question is, though, is the Commonwealth willing to ask them for it? It could be blind data. It doesn't have to be identified as individual cases or circumstances. But that blind data to the prescription that you're talking about is most easily available by the insurance companies themselves. And that's the quickest and fastest course of action in terms of getting that information to either a regulator and to the Parliament itself in order to inform future legislative pathways. And I think that is not an unreasonable ask. And I use the example of the alcohol one as an example of where business is required to provide that type of report, any type of reporting.
And then I'll give you the opportunity with those 7 recommendations, anything that you think you need to emphasise that you haven't already raised.
The committee's doing its work now in terms of number 1. The transparency issues is a question around having that line of transparency and openness between brokers and underwriters, and that is mixed. The reform liability is a mixture of commercial and state legislative requirements. The catastrophe modelling methodologies and ensuring regional pricing reflects actual local risk exposure is an important one. It's a global risk assessment, as you just referred to in that anecdotal quote, not easily managed, but it's certainly one that where there's individual high premiums placed on businesses in regional areas, actual risk exposure as opposed to an assumption about potential risk, acts of God that they have no control over versus a case history of multiple cyclones and or natural events that have caused disasters. The consideration of the mutual pooled or government-backed reinsurance model is an important one. Whether there's caps on certain claim components and proportionate limits, I'm not an actuary, I'm not sophisticated in that area, but I think it's worth examining in your process. And then any measures that deter fraudulent or opportunistic claims, the ambulance chasing approach, and I'll certainly ask our colleagues in Queensland around the success or failure of the Queensland farming precaution or restrictions. But I think in any area of law where there's potential practice for that, it's worthwhile examining. So, Angela, do you have anything we should add there? Yeah.
We're coming to the end of our time, but I think there's one further clarifying question from Ms Lawrence.
Thank you so much. It's just to your recommendation to run the greater transparency, because you've actually provided some really interesting case examples. And if I just go to the one, for example, on the second page of your submission around workers' comp, where you're saying, where the person stated that GIO elected to settle a claim, paid out $100,000 as it was commercially cheaper than going to court. The consequence being for this business was their premium went up 40%, but the employer had no rights but is penalised by the system. And I think there was a previous one too which referenced that the business is not consulted as to whether the claim would be settled. And I'm just, again, this is getting back to data, but and the transparency point you're making. But what role do you want business to be able to have, do you think? Like what are the members asking for? Are they asking to be able to be the decider, to be the decision maker as to whether a case goes to court or whether it is settled out of court? Like, do they want agency over that?
I think there needs to be a shared agency where there is a reasonable ability for the business that is insured to seek its own independent legal advice and or make decisions based upon that shared risk, because at the end of the day, yes, the insurer is paying out, but the business is also paying through reputation management and then further premiums that are ongoing as well. And so finding a model or a hybrid where there can be some sort of mediated approach to, where is it 50-50, is it 60-40, or how does it work? I don't know the answer to that, but there needs to be a balance in that approach as opposed to just the insurer, the underwriter, dictating the outcome that the business has no regard to it.
Thank you. Thanks, Chair.
Thanks very much. And we thank you and all the witnesses we've had so far today. We've got a short afternoon session, but that concludes this session. If you have the capacity, we do ask that you return the answers to questions on notice you've received by Monday, the 17th of August. That concludes this session, and the committee will suspend until 1:15 p.m. Thanks, everyone.
Thank you.
You ready? Thank you. The committee will recommence, and I now welcome the Chamber of Commerce and Industry Western Australia and the Regional Chambers of Commerce and Industry Western Australia. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to each of you. For the Hansard record, will you please state your full names and the capacities in which you appear today? We might start with you, Ms Fabling.
Excuse me, sorry, what would you like?
Just your name and the role in which you appear today.
Sure. Joanne Fabling, CEO of the Midwest Chamber of Commerce and Industry.
Kitty Prodonovich, CEO of the Regional Chambers of Commerce and Industry of WA.
Tay Allers, Principal Advisor Policy at the Chamber of Commerce and Industry WA.
And Dr. Daniel Kiley, CCIWA Chief Economist.
Thank you very much. I now invite you to make a short opening statement. At the conclusion of any remarks, I'll invite my committee members to ask questions. Who's going to lead off with the opening statement? Mr. Kiley.
Thank you. Thank you, Chair. And thank you to the committee today. It's always great to have federal politicians here to understand WA's value as the economic powerhouse of the nation. The Chamber of Commerce and Industry WA is the peak business group in Western Australia. Our members range from large multinationals to not-for-profits, small mum-and-dad businesses and local chambers. We estimate our members employ hundreds of thousands of Western Australians each day. Our vision is to make WA the best place to live and do business. To inform our advocacy, we engage our members in quarterly business and consumer confidence surveys, and we are the only chamber which captures both business and consumer insights. From the outset, we advised that we did not provide a submission to the committee. However, we do note that many other submissions highlight CCIWA business confidence data, and we also note that there have been other recent inquiries into insurance costs, notably the Australian Competition and Consumer Commission's Northern Australia Insurance Inquiry 2017 to 2020. Today, we seek to share our general view that the cost of doing business, including insurance increases, have a direct impact on the cost of living in WA. Concerns from our regional chambers and members that exist, and data pertaining to our December 2025 business confidence survey. First, our general view is that insurance costs are a significant and growing issue for members across regions and metropolitan WA. This view is reinforced by some of the other submissions from WA, including those by AHA WA, Outdoors WA and the State Government's Small Business Development Commission. Insurance is essential for managing risks. However, risk premiums are taking their toll, particularly for small businesses in what is perceived as risk-prone areas. From a macroeconomic view, if less businesses operate with insurance or underinsure, then there is a risk of consolidation across the insurance sector. This has been evidenced over the past few decades with a shrinking list of providers, with companies often being bought out. Less providers and less competition can result in higher insurance premiums. On the other hand, if a business seeks to insure and pays higher premiums year on year, this pushes up local costs, in turn resulting in a higher cost of living. For businesses in rural and regional remote WA, which face a higher cost due to isolation, this can result in businesses closing because of the cost of doing business is uneconomical. Second, we wish to highlight that the oversized impact insurance matters are having on regional WA. There is a degree of market inequity, with some members reporting that despite having access to different insurance brokers, often only just one insurer will provide suitable policies. While the Australian Government's cyclone reinsurance pool does go some way to reducing the overall cost of operations in the north of WA, for example, the cost of fuel and the recent regional price index found that the northern regions, the Kimberley, Pilbara and Gascoyne, remain the highest cost, with indices of around 10% higher than Perth. We note that a coalition of northern suburbs provided a 2025 federal budget submission focusing on the market failure of an essential service in Northern Australia. This document includes recommendations which seek to deliver fair and affordable insurance premiums in Northern Australia. And the third aspect we wish to highlight today is CCIWA's Business Confidence December 2025 data. we found that generally insurance premiums were a significant barrier to growth. Just over half, 53%, of businesses reported that insurance was one of their top 3 cost pressures. Almost 2 in 5, almost 40%, said their business had to go without insurance or operate underinsured as a result of higher insurance costs. This data aligns with the results of the Australian Chamber of Commerce and Industry's Small Business Conditions Survey, which found that insurance increases are one of the key cost considerations for small businesses. As outlined in previous hearings by multiple parties, Australia is fundamentally a small business economy, which means that when small businesses are under pressure, the consequences are felt well beyond the businesses themselves. When insurance becomes unaffordable or unusable or even unavailable, it constrains growth, it limits participation in markets, and it weakens community resilience. Thank you for your time, and we look forward to hearing your questions.
Thank you, Dr. Kiley. Just before I hand the call to Ms Lawrence, can I ask, what was the second document you referred to there that was a budget submission, just towards the end of your remarks?
Yeah, there was a coalition of, Chair, there was a coalition of Northern Chambers who worked together to provide a federal pre-budget submission last year, which we can provide on notice if you would like to.
Please, I don't recall that we've received that, so that could be quite helpful. Thank you very much. I'll go now to Ms Lawrence.
Thank you very much for your time today. I just want to start by the APRA has provided some data suggesting that industries that have experienced an increase of around 40% or higher of their gross written premiums, this is from 2023 data, were transport and storage at 61%, construction at 60%, retail trade at 41%, and accommodation, cafes and restaurants at 40%. I anticipate there are a lot of members would fall within those sectors that you represent. And then if I turn to the data that you've shared, from the survey that you put to members about their insurance status, almost 2 in 5 businesses reported going without insurance or operating underinsured due to increasing costs within the past 12 months. I frankly find this really quite alarming when you're having the increase in costs overlaid with the data that you're collecting, which is more contemporary as well. So just wondering if you could just speak to that a bit further, whether you were able to identify which particular sectors were most likely to go underinsured or operate without insurance.
Yeah, thank you. Look, we found that there was, across all sectors, quite a heavy burden of insurance, particularly in terms of being underinsured. We saw that almost across all sectors. I guess sectors that had gone without insurance tended to be those such as the public administration and safety and other support services.
Just give some examples of what you mean by public administration.
Yeah, so examples there include private security, local services, and even local government organisations that fall under pressure there in that category. We also see temporary agencies and various wraparound services for other organisations, and we see this across the regions of WA.
So they're operating either underinsured or without insurance, so 2 in 5. So because presumably for their ability to do work, be it for local government or for an event venue in the hospitality sector, if they're providing security or at Optus Stadium, it would be a licence condition, or it might be a requirement for them to secure that contract. So how confident are you in that statistic? Because that is seriously alarming, that they are, because presumably they're now operating outside the law or their contract obligations or...
So I should put a caveat on this data, of course. This is from December 2025, and it is across all of Western Australia. So there may be some contracts which don't necessarily require the granularity that you've heard from earlier today, in terms of awarding a contract requiring a set requirement with insurance, so that there are caveats. May I pass?
Sample size, Mr. Alex?
The sample size for this survey was 430 total respondents.
And how many businesses did you seek information from?
I can take that on notice, Chair. Yep. I may pass to Ms. Prodonovich. For our CCIWA is a separate entity to CCIWA, and there are some more regional examples that may be pertinent to this discussion.
Thanks, Tay. So if I could just give a quick introduction as to who RCCIWA is. So we are a separate organisation to CCIWA, but we obviously all work in collaboration. I am a member of their General Council Forum. So RCCIWA was formed in 1999. Our members are all of the regional chambers of commerce, business associations or business networks in regional WA. We are only regional WA, and the bodies themselves are our members. There's 46 of them. And we represent, collectively, they represent around 10,000 regional businesses. So all of our views are solely regional. When you asked before, I'm in Perth, but everyone else is in the regions. So insurance is a massive issue across regional WA for every single community. And there's sort of 5 top issues for businesses, and it's all sizes of businesses, lots of small businesses, but also not-for-profit community organisations. So the first issue is obviously the rising cost of insurances, excesses and premiums. And we've had reports from some community organisations and small businesses that the increase is anywhere between 35% and 145%. So our organisation, which is a not-for-profit incorporated association, our insurance, and nothing has changed, as in that would make it more, has increased 36% in 4 years. And so if you think of all these NFPs, you know, they're all running mostly, not all, but mostly on volunteer committees, limited resources. You know, it's a massive increase. So the 5 issues are rising costs. The insurance risk ban for Northern Australia is a really big issue for our members. The fact that the Pilbara and the Kimberley is assessed in the same risk ban as the Northern Territory and Queensland. The Pilbara and the Kimberley want to be separate, but also separate from those because it really increases the risk and the cost. Availability of insurance. So we have a lot of businesses that are told they can't get insurance. So there's areas they can't insure. The complexity of insurance is the 4th issue for small businesses. There's a lot of new products out there and they all want to do the right thing, but it's really overwhelming. And often the person they're going to for advice is a broker, who are great, but there's a vested interest. And then the 5th area of concern, which is massive in regional WA, is the lack of assessors. So Cyclone Seroja went through the Midwest and Kalbarri in 2021, 5 years ago, and there's still businesses that haven't had their repairs done 5 years later because they haven't been able to get assessors or the right builders, which is just unacceptable. I would like to now hand over to Joanne Fabling, who's the CEO of the Midwest Chamber, but she's also the Secretary, Treasurer and Committee Member of RCCIWA, to give a bit more detail, if that's okay.
And Ms. Fabling, could you just give an indication of where exactly it is that you cover as well? Thanks.
Certainly. So the Midwest of WA, which encompasses 16 shires.
Okay, from where to where?
It's that beautiful agricultural grain belt, yes.
Okay, great, thank you.
Thank you. Good afternoon. My name is Joanne Fabling. I am the CEO of the Midwest Chamber of Commerce and Industry, and I would like to reiterate, as to my colleagues, to say thank you very much for holding this inquiry. It's been a long time coming and really welcome. So the Midwest is one of Western Australia's most diverse economies, with industries spanning agriculture, aquaculture, resources, manufacturing, tourism, emerging technologies and deep space research. Yet, regardless of industry, one issue consistently raised by our members is insurance affordability and accessibility. Insurance has become far more than a business expense. It is now a significant barrier to operating, investing and growing regional businesses. In preparing for this inquiry, we sought feedback from businesses across the Midwest. While each operates in a different industry, their experiences reveal common and systematic issues. As Kitty has advised, 11th of April 2021, enter Cyclone Seroja. Cyclone Seroja exposed significant shortcomings in our insurance system. One Kalbarri resident waited approximately 6 months for a contents insurance claim to be finalised, despite providing all requested documentation During that period, they experienced poor communication, lengthy assessment delays, and were notified of a 20% premium increase while their claim was still being processed. As at today, there is still a number of businesses that are still waiting for those damages to be repaired, and that goes from Kalbarri, Northampton, you've got Chapman Valley, Morawa Shire, Perenjori Shire, and some parts of Karoo. So 2021, and we're now in 2026. Yes. And so I'll just continue, and obviously you'll want to ask me questions as we go. So business experiences in general. The feedback received demonstrates that these issues extend well beyond natural disasters. A regional electricity security and communications contractor has experienced a 77% increase in commercial insurance premiums over 3 years, despite only minor motor vehicle claims. A regional tour operator experienced a 70% increase in commercial motor vehicle insurance premiums following 2 unavoidable kangaroo collisions. Only 2 insurers were prepared to provide quotations, leaving virtually no competition. A regional event hire business received insurance quotes of $70,000 to $90,000 per year to insure bouncy castles and a mechanical bucking bull. At those prices, the businesses cannot afford to commercially operate the equipment, despite having heavily invested in the assets.
Can I ask what the percentage increase was of those entities?
I just have a dollar figure for that one. So it was following, obviously, the Tasmanian incident. Yeah. And they had already invested in this business prior to that, and then following that, that's the insurance premium increase quote.
If you could take that on notice, that would be good. Thank you.
Thank you. Another regional business reported insurance increases of approximately $6,500 over 2 years across workers' compensation, public liability, professional indemnity and business package insurance, while also being declined by 8 insurers before obtaining cover as a regional event venue. Regional Aboriginal businesses also report increasing premiums. Fewer insurers willing to quote tighter policy conditions and insurance costs, reducing their capacity to invest, employ staff and compete for larger contracts. The common themes across all these submissions, the same issues emerge. Premium increases well beyond inflation and often unrelated to claims history. Reduced competition and fewer insurers willing to cover regional businesses. Higher excesses, additional exclusions and increasingly complex policies. Rising insurance costs delaying investment, expansion and employment. Businesses being penalised for risks beyond their control, including wildlife collisions, burglary and operating in regional locations. In conclusion, the evidence demonstrates that insurance affordability has become a structural barrier to regional economic development. We encourage the committee to consider reforms that improve market competition, increase broker fee transparency, simplify policy comparability and better recognise regional risk. We would like the committee to also consider the impact of stamp duty and GST, which together represents a substantial proportion of many insurance premiums. 16% is the advice I've been given from inside the industry. Target relief for small business and not-for-profit organisations would provide immediate assistance at a time when affordability is becoming critical. Finally, I wish to place on record the Midwest CCI's concern regarding the proposed RAC-AGL merger. In regional markets where insurer choice is already limited, further market concentration risks reducing competition, placing additional upward pressure on premiums and further eroding service deliverability to regional businesses and communities. Regional businesses understand the need for insurance. They are simply asking for a market that is competitive, transparent and affordable, enabling them to invest, employ and contribute to the continued growth of regional WA.
Can I just respond to that before we come back to Ms Lawrence? We took evidence in another inquiry, and I made this comment there as well, that the argument to remove GST and stamp duty is way beyond the remit of this committee, and the reality is the roads that regional people need to drive on and everything that comes with the infrastructure of those taxes, both the GST and the state-based stamp duties, it's pretty unrealistic for us to deal with this matter, which relates to insurance, by such a removal. So we just sort of carve that one off, but take all of your other evidence as very, very instructive with regard to what can be done. I know that's a cost that's easy to identify, but it's also one that's impossible to replace. So we just can't even contemplate responding to that. Ms. Lawrence.
Thank you, and thanks very much. Your submissions, they were just fantastic to hear, very insightful. So just reverting back to the data then from the survey of your members. So you've identified that the participants to the survey had suggested that their insurance costs were 53% in terms of the responses to business cost pressures. And then for comparison, wages was a business cost pressure of 45%, but of course a wage is a way for the business to then make money, whereas an insurance is a dead cost to a business. So just trying to then appreciate, you're representing a significant range of businesses. To what extent then, given the level of underinsurance that you're suggesting is prevalent, or those operating without insurance, is there an understanding of the actual business risk profile? Because I know, for example, Ms. Fabling made reference to claims history, but from an insurance perspective, they're looking at future risk and exposure, which particularly taking account of natural disasters. We've heard earlier today about psychological claims and so forth. It's much more difficult to price that well. So how, from what you understand from businesses, how literate are they to understanding their risk and then being able to communicate to through their broker or whomever the measures, the mitigating measures that they're putting in place, which they would then rightfully expect to be reflected in their premium? Have you got a sense of where businesses are at?
Mr. Kiley.
Could I just clarify, first of all, in terms of the respondents to the survey, the question that was asked was, what are your top 3 barriers to growth for your business? And in terms, therefore, of the 53% that said insurance, that's 53% of businesses putting insurance as one of their top 3 costs, and therefore wages being one of those as well.
Yeah, it's significant.
Yeah, absolutely. And of course, again, that's the top 3. So for others, it might be number 4, 5 or 6. So, you can imagine it's a burden for a lot of businesses, not just that recorded as their top 3. In terms of, what were the drivers of that we got a broad range. People were talking about just more broad levels of insurance across all the types of categories that have already been mentioned here and that businesses face. Certainly in terms of literacy, I think for a lot of smaller businesses where they simply don't have that capability or the time to get across a lot of the financial literacy that's required and the challenges there, that's something that certainly we would call for further supports for businesses there so that they can navigate the complexity of the system. But also pointing to Joe's point earlier around the availability of insurance to the members, because for many they simply can't even get a quote, or they only have one quote that's available. So again, more competition would certainly be welcomed in that regard as well. Although we note that that's it's a complex market, and it's not always possible to have multiple competition within it, and for some there may be good business cases as well for businesses coming together or in terms of the insurance market.
But when you undertook the survey and identified the 2 and 5 underinsuring or not taking insurance, were you able to identify, break it down further into what type of class of insurance? Is it public liability they're not insuring for? Is it professional indemnity? Is it workers' comp? I mean, presumably workers' comp, they wouldn't be able to not insure. So is there particular classes that they're opting out of? I imagine, for example, cyber is a new class of insurance that I imagine a lot of businesses probably haven't opted into. So that one might then be captured of not taking out insurance against. So were you able to clarify the 2 and 5?
In short, no, that wasn't part of the series of questions for this. I'm sure you guys have designed surveys before. It can be quite tricky to capture the real kind of granularity sometimes with the data. But I might defer to Ms. Pridonovich for some of the regional perspectives.
So what regional businesses have told us in droves is, so they'll have obviously workers' comp and public liability because they also have to, and a lot of their contract, whatever the business is, but they now are choosing, so when they're underinsured, they're just choosing to forego other insurances. And I think most regional small businesses that we work with every day do have an understanding of the risk. It's just their budget. Like, they just is no more money they can't afford. So the insurance that they forego is often contents and building. Right. So we know in the southwest region, like particularly the Margaret River region, what those businesses have told us is they insure all the things they need to that are compulsory and sort of external, but they're just going to put away a bit of money every year. And if the whole vineyard burns down, because it's a bushfire-prone area, they will just rebuild it because it's not like they can save the vines anyway. So they're self-insuring and taking that risk. So it's contents, buildings, lots of businesses and retailers, especially in areas where there is a high crime area, they're not doing building, contents, glass insurance, anything like that. Farmers are telling us that, so they insure farm equipment and they're now only insuring some or 2 bits. They're just saying it's just not worth it. We'll actually just take the risk because the premiums are so high. So I think they're under-insuring some of these availability, but most of it's by choice because they just can't afford it. It's just, and they might have insurance. There was a business down south, they've got a chalets, their insurance has quadrupled in 4 years and they haven't made a claim in 10 years. So they've got it, but because they want to be responsible. So I think more of that under insurance is it's just too expensive, and so the ones they have to have, because they can't have contracts and have other things if they don't have PL and workers' comp, and they have to. But the rest, I think they just see it as optional because of the cost. Would you agree, Jo?
Yes, in conversation with some of our businesses, it's, especially in the retail sector, they're not taking any forms of insurance that are not compulsory. With theft, they would prefer, because they can't afford to make all the claims that they need to and pay the premiums, so they're foregoing that type of insurance. Glass insurance is definitely one. Anything that is not compulsory, they're choosing to forego. There's also a great measure of business fatigue. That comes with all of this rising costs of doing business. And we've had a number of business just elect to close up shop. So they might be a mechanical business, which has happened last year, have had multiple apprenticeships flow through the door, and just the rising cost of doing business, the cost of insurance, the cost of fuel, everything has just imploded. They've just elected to close up shop and walk away. So not even choose to succession plan the business out. So that's the type of fatigue that is setting into the regions around the cost of doing business, with insurance at the top of that.
Thanks, Jo.
Can I just ask, I come from a small business family too, and growing up in it, I just think of fatigue and small business as two things that go side by side all of the time. Do I don't know when you ever get out of that. If you're in small business, it's always like your house is on the line. You're responsible for wages for people that you really care about. You pay above the wages, so you keep the people. Like, what's shifted in the mindset? Is this part of the modern condition for us? I mean, has business really got that much harder for people, or are people simply saying, in a way that previously, I will endure this? Are they just not enduring anymore? Because I can never ever remember it being easy. So what's the changing thing? Is it like we're looking at insurance, but I've got a feeling there's something more than that going on here.
Absolutely. Would you like to say that? I think, as a previous small business owner in regional WA myself, I think what has changed is the relentless increase in costs. So you know, everyone in small business, like it's always hard and it's always a lot and it's always, but
It's never got cheaper.
no, but you can
Ever.
see a light at the end of the tunnel, and right, we've had a bad year, but next year's, you know, and there's hope, and also small business owners, their nature, they are optimistic and entrepreneurial, and the ones in regional WA even more so. Yeah. But I think what's happened really since COVID is there's just been years and years of relentless costs where they can't see the actual return because they've got to make money, right? And they've got to be able to, and they'll be okay to not make money for a year or two as long as they can see the light at the end of the tunnel. So COVID, which impacted small businesses tremendously. The fuel in WA, I don't think it's really understood by people that don't live in regional WA how much more expensive it is because we're a driving state and every cost input has increased because of everything has increased. And then you've got insurance, then you've got wages, superannuations increase, small businesses now can't claim credit card costs. So it just becomes one thing after another. So I don't think there's one particular thing, but I think a lot of small businesses are going, do you know what? I just don't think we're going to get there. It's actually too hard. It's just too hard because you want small businesses to thrive and be successful. We want them to make money and keep growing. And in regional WA, they certainly add to the livability of all regional communities. Yeah. I think it's just been the accumulation. Would you think that, Jo?
I would agree with that.
For years.
And it's a lot of little things.
COVID plus other supply chain factors.
I think so, yeah.
Yeah. So if I may, Chair,
Mr.
just
Kiley,
add to that, our recent business consumer confidence survey, it's at the lowest that it's been since the COVID pandemic. And we've been running the survey since 2009, and it is one of the lowest across that historical period as well. And consumer confidence is at the lowest it's been since CCIWA started the survey in 2009 as well for the consumer confidence one. So I think it's that knock-on effect from consumers having a lack of confidence, combination of higher costs, interest rate rises, and the Middle East crisis, and on the back of recovering out of the COVID pandemic, I think it's just another hit for the community. And again, we're just feeling that across businesses, and again, small businesses in particular, being impacted quite heavily at the front line of this, and finding it harder to absorb those costs with lower margins and an inability often to absorb those.
And those small businesses are critical everywhere, but nowhere more so than in the regional parts of Australia, because they're not just businesses, they're part of the lifeblood, and there's a very commensal relationship between all of those businesses. Thanks. I'll go straight to the Deputy Chair for a series of questions.
Thank you, guys, and I really appreciate your coming in and sharing your thoughts with us. I come from a transport background before politics. I had 14 depots around the state of Queensland, so I do have a sense of regionality, and I have a sense of the pressures on small business. And I remember going to pay wages one week, I think it was $80,000, and not having the money in your account and just spewing into a waste paper basket next to my desk, thinking, how am I going to do this? I think...
But it was a supplier you were waiting for a payment from.
It was just a slow month. You get those 5-week months where you've got all your weekly outputs going, but only 4 weeks are, But we got there. But I think I remember in that sector, and I want to ask, what effects do you think that the interest rate hikes that we've had, even though commercial loans should be tied to a pin to a rate at the time that you take the loan out, but how many of your members would operate overdrafts, which would be variable and swinging on that component? We've also had increase in wages. This is outside insurances, of course. You don't have to see any of those, but I suppose more relevant to this inquiry, I do want to understand, is Western Australia an over-litigious state where people are making claims? Is that part of the increase in insurance? And the other question I want to ask is, to your point, who's the only insurer left when you've said on a couple of occasions there's only one insurer often? Who's the largest insurer? Who's often that person? Because we've taken evidence from insurance companies who want more competition in the marketplace as well. They want to share the risk. So just trying to do a bit of a dive into what Western Australia looks like.
So I guess in terms of who's the most litigious where's the most litigious activity.
Yeah.
Unfortunately, you'd have to go to the insurance companies. I'm sure that they would hold that information. I think part of the issue with access to market and lack of competition is, from what we can tell, is that Northern Australia band. And I'm sorry, you are from Queensland, where you do bear the brunt of cyclones. There's a higher population. There's more of an impact at the end of the day. But we do have examples of regional cities here in Western Australia which are built to absorb the water of a cyclone, or they're built in certain ways to be strong against those natural disasters. But the cost of those premiums still increases because of that northern band. And I think, as the regional chambers have mentioned, if there was an opportunity to split out the regions a little bit more, or look at a risk-based matrix potentially, which is more localised, that may be a solution that's low cost. And I know that's a question that you've been asking, Chair, is what's the solution here? And potentially...
They can now do it right down to your individual home.
Yes.
And if your neighbour hasn't done like bushfire maintenance, you're going to cop the premium increase too, because they can see what your neighbour has or hasn't done.
Yes.
So to your point about the business, there's no technological barrier to having more discreet pricing.
So, to the solutions?
Who's the largest insurer first, do you reckon?
I don't actually know.
Usually brokers will not present all the opportunities. I guess that's where it comes into the transparency of, when they're creating a policy for their business, not everything is on the table, so you need to do your own research. We have found that the RAC is probably predominant for residents, and also some of the smaller businesses. But for everything else, it's a real mix.
Has the Chamber of Commerce done anything proactive in trying to invite other insurers to the state? As far as a solution?
That's a great question.
Heaven forbid we try to do something about it.
I think, in short, our advocacy is mainly directed with government, federal government and state government, and obviously we do have RSC as a member of CCI WA. I believe they're the only insurance member that we do have, but I'm happy to check that and provide that on notice. But in principle, no, we mainly target our advocacy to government and to other industry partners where we think there's an opportunity to elevate stories or highlight success. So,
I think we've done the same thing, advocacy to state and federal government. We have a lot of advocacy opportunities with members of parliament and ministers where we talk, because the rising cost of business is the number one thing that everyone's talking about. It's always insurance costs. So we all bring examples in that general advocacy, but we haven't actually advocated directly to insurance companies. But we'd be happy to. But it'd be great to see if that got traction. Because if we're going to a minister or a premier, we're assuming that that's carrying some weight, but to go direct to the organisations, that would be brilliant.
Council of Australia, though, are you a member of them,
no,
like on
we're
the
not.
working groups at all? Or?
No.
So CCIWA is a member of API, the Australian Chamber, and they have the Insurance Council as a member. But there's been no direct engagement, as far as I'm aware, from the policy and advocacy.
Are you confident that when a broker says to one of your businesses, I have got a product for you, or there is only one product, are you confident then in all those circumstances, because that's the evidence we're receiving, are you confident then in all those circumstances that the brokers have actually exhausted the market? Or is it just convenient for them to say that?
I think it comes down to transparency of the product.
You're asking for, and my question is there any degree of transparency to give you confidence that these assertions that you're reporting in good faith, where people are being told your business is uninsurable, your business, there's only one product, are you confident that that is the truth that is being told to those businesses?
I am in regional WA from the perspective of most of the brokers that regional businesses deal with will be long-time regional residents. They're a really integrated part of the communities, and so I always err on the side of people doing the right thing. I feel like they would be. I feel like they have no reason, or they may be saying that because there is another option but it's too risky and they're trying to protect that business, but I do feel confident that they're telling the truth.
Or are they trying to protect their business
Maybe.
and keep the most profitable product in the market for themselves.
Maybe, but I just don't feel like brokers in regional WA, that's how they would.
But there's nowhere that this is reported for any transparency to Ms Fabling's.
Yeah.
Yeah.
What do you think, Joe?
So we have a number of insurance members. Geraldton is a city of 40,000, a population of 40,000, so quite a sizable place. And I do feel that the brokers offer authenticity when they're going to market within their range and the scope of their level.
Yeah, okay.
However, what sits over and above them obviously is a corporate entity that has a risk matrix, and they operate within that. And that's where regional WA.
A live example in Queensland, for your benefit, is a regional community that was inundated a number of occasions because of flooding. So the Shire built a levee bank around the community, and as a result, no house has been inundated since the levee bank has gone in.
Right.
But the insurance premiums have still continued to go up. So they took a position of, they got the largest insurer in town, back of the envelope calculation, gave them a call and said, can you come out? Can you come out here and explain to this people, the community, why you're doing what you're doing to us? They did. They said, yeah, you might have a bit of a point. Negotiations are underway. Now, that's where we learnt that they want more competition in the marketplace. That's where we learnt we actually want that levee bank another half a metre higher. When we look at our data records, they're very sophisticated with what they've got, how they assess risk. I only share that story with you, that if you've got 53% of your people telling you that insurance is a significant issue, I'd be having a come to Jesus chat with your insurance guys as well. We're hearing you, same as every other state, but we are seeing proactive outcomes by dealing directly with them and asking them the question, what's going on. I mean, if we could put forward, oh mate, with the jumping castle, that's just a complete overreaction to the Tasmanian job. If you bring the insurance guys out and say, mate, these earth picks that we got to, no one's pulling these out of the ground. This is a risk mitigation thing. Yeah. If we do that, what can you do on your side? I just suggest that from a business perspective, shifting the dial on change in behaviour is going to have a far greater fluidity than government intervention. I'd leave that as a comment for you, rather than asking for something back.
Okay. Senator Scarr has two questions, and then I have one on notice.
Just two questions. Ms Fabling, I wanted to take you back to the comment you made about the potential merger between RAC and IAG. Is RAC's your local automotive membership group, is it, in WA?
Yes, so RAC does hold an office in Geraldton and also a number of dedicated repair auto shops, etc., and also glass. And history suggests sometimes that, through banks and also grocery, etc., that sometimes monopoly is not really a great outcome for mergers. And on behalf of the Chamber, we see the same thing happening here, that if RAC and AGL were to merge, suddenly our WA market, because it is a WA member-based organisation, yes, it's a not-for-profit, would suddenly become exposed to a more national risk.
So have you made submissions to the ACCC? As I understand it, the ACCC is looking into that proposed merger now, and they're actually in the process, phase 2, I think they refer to it as the process they're going through to determine if there's any competitive outcome as a result of that merger. Are you making any submissions, or is anyone
I have
else
not
making?
as yet, but
Okay.
am looking to do so
Yep. So that opportunity's there.
Absolutely. Thank you.
Okay. The second question I had, illegal tobacco. No one's talking about illegal tobacco. And I'm not talking about where I can get some. I'm talking about the impact it has on the insurance market in WA, because we're hearing reports that people have got small businesses, say in strata developments, which have been targeted because they've got a shop that's selling tobacco products. They've been subject to arson attacks, something we're seeing certainly in Queensland. And that means the insurance premiums for all of the shops in the building are going up. Have you got any input you can provide us with respect to any issues?
I haven't. Have you heard? We haven't had any feedback from members on it yet.
Not yet. Okay. No, Senator. My understanding is more that the crime risk in the northern half of the state is has more of an impact on premiums than illegal tobacco specifically. I think the SBDC, Small Business Development Commission, spoke this morning too, and they probably were more alive to what the government's doing in that space and the impacts. Yeah.
Okay. Thank you, Chair.
Thank you very much. Our time's coming to a close, but there are more questions I'm sure that I'll have to ask. Can I just put one on notice immediately, though? The Australian Hotels Association put an opening statement to us today that talked about a mutual insurance company being established in places where the market is very thin or absent. Be very interested to get your response to their submission. The other thing is you're interacting with companies and small business entities that are interacting with the banks all of the time. The bank's literacy and power is much more commensurate with insurance companies, far more commensurate than many of the businesses that you represent. Have you had any conversations with the banks about the impact of insurance on the sustainability of their investments in businesses?
I could just answer a quick bank question.
Yes.
Because so many of the regional branches have closed down.
Yes.
In regional WA, like hugely, and banks have gone like solely online. They're not even delivering at all in regional WA.
They're still lending though.
Yeah, they are, but I think that they haven't gone to the banks, but there's not a great deal of trust of banks at the moment just because they're closing down all the regional services. So people are feeling a bit unsure about that.
So
It is a good question.
Yeah, can I just put it to you to think about?
Yeah.
The reality is it's in the bank's interests that these businesses survive as well.
Yeah.
I mean, there's risk to
Yeah.
them. So these things don't operate in isolation. And when you've got a small group of people who don't have the power to speak up to power, and they're all separated, not just geographically as in this great state, but by separate interests and separate industries, that displacement of power across a large number of people who are vital to the success of businesses and regions needs sometimes a good social champion. And, you know, banks, they stand to lose if businesses fail, right? So what's the conversation going on there between the banks that are supporting these businesses and profiting from these businesses with the large insurance industry as well? So if I can ask you to do a couple of those things, I would appreciate any thoughts that you have. Can I thank you very much for your evidence here before the committee today? And if you could provide responses by Monday the 17th of August to those questions, I notice that would be good. The Secretariat will be in touch with you to provide further support. Thanks again for being here today, and thank you for your advocacy, and we wish every business in the state great success.
Thanks for having us. Thanks for the opportunity.
Thank you. I now welcome online via teleconference representatives of the Australian Small Business and Family Enterprise Ombudsman. I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you all. For the Hansard record, will you please state your full names and the capacities in which you all appear today? I now invite you to go on. Yes, please.
Sorry, Chair. You go ahead.
We'll start off with you, Miss McAlery-Smith.
Yes, thank you. Linda McAlery-Smith, the Australian Small Business and Family Enterprise Ombudsman. Can you hear me okay, Chair?
Perfectly. Can you hear me?
Right. Yes, I can. Yes, thank you.
And you're joined by Mr. Storer. Could you state your name and the capacity in which you appear today?
Certainly. It's Aidan Storer, Executive Director of Policy and Advocacy at the Australian Small Business and Family Enterprise Ombudsman.
Thank you. And for your knowledge of who's here in the room, we have Mr. David Moncrief, MP from New South Wales, Ms. Tanya Lawrence, MP from Western Australia, Senator Deborah O'Neill, I'm the Chair from New South Wales, the Honourable Scott Buchholz, Deputy Chair from Queensland, and Senator Paul Scar, also from Queensland. Ms. McAlery Smith, if you'd like to give us an opening statement, the committee will follow with questions. Thank you.
Thank you so much, Chair, and I'd like to also thank the committee's understanding for allowing us to dial in by telephone today as well, so thank you for that. I'll keep my comments brief and then I'll move. We're very happy to answer your questions. It is certainly no question that access to affordable and appropriate insurance remains a significant challenge for many of our Australian small businesses. While the nature of the challenge varies across sectors and regions, as BEFIO continues to hear evidence of rising premiums, reduced availability of cover and increasing levels of underinsurance, which can affect business viability, access to finance and investment decisions. We know our small businesses are often experiencing sustained year-on-year premium increases. We've consistently found that in addition to rising premiums, reduced availability of cover and coverage limitations are contributing to some small businesses being uninsured or underinsured, and in some cases small businesses are maintaining lower levels of cover than they require or accepting higher excesses because adequate coverage is no longer affordable. There's a range of factors in our experience from what we're hearing from small businesses in their experience trying to secure insurance leading to this, and the feedback that we're hearing is it's related to increasing frequency and severity of natural disasters and weather events in our country and around the world, issues around the world of course as well, higher claims risks in some industries, inflation pressures contributing to higher construction and replacement costs, and some businesses operating in sectors that present higher risk underwriting risks are bearing a greater brunt of these pressures. So, Chair, very happy to move to the committee's questions now.
Thank you very much. And we'll start with questions from Senator Paul Scar from Queensland.
Thank you very much, Senator Paul Scar from the great state of Queensland. In terms of lack of available insurance in certain sectors and regions, I'm very interested in the work that the Australian Small Business and Family Enterprise Ombudsman has done in relation to the potential use of discretionary mutual funds. And yes, it seems to me that we've gotten to a situation, certainly in relation to some industries or subcategories of industry, for example, the amusement, leisure and recreation area, caravan parks is another area in our home state of Queensland. We received evidence at our Queensland hearings on. There's also, we've heard from the Hotels Association as well in relation to the cost of public liability insurance. So I'm interested in your views with respect to the establishment of discretionary mutual funds as a potential solution, the most suitable and viable long-term solution for some segments, market segments, where there's just been market failure.
Thank you, Senator. And the committee would be aware that BEFIO has produced a number of reports specifically going to this discretionary mutual fund, sort of initially back in 2021 and then again in 2023. And Senator, going specifically, as you'd know, to the Australian Amusement, Leisure and Recreation Association's proposal to establish a discretionary mutual fund, which I'll just call DMS for all of our ease, as a potential solution to the availability of affordable insurance in the amusement, leisure and recreation sector particularly. And there are certain attractions to a DMF where insurance is either actually not available or in all practical reality not available because the accessibility of prices, either both in terms of premiums or for deductibles is actually just such that in practicality for a small business, it's not realistically actually available. And the great work that we did back in 2021 and 2023 had identified some options in terms of that and some attractions about having a defined DMF. One of the things that we looked at as part of that was, in order for that to be successful, it was contingent on a number of different things actually coming to pass. And we did acknowledge, and we would still hold this view, that a DMF is it's not the first choice. And one of the reasons for that is there is obviously residual risk exposure for a business because of the discretionary nature of the actual product. And from a consumer perspective, there is the lack of certainty that either a claim could potentially get paid out, or one of the very practical realities in some sectors where the scale of a potential compensation claim might be so great that it would exhaust the available money that's sitting within the fund. So there are a couple of things which we were talking about in terms of it needing to be a success, which is really appropriate and active risk mitigation frameworks certainly within the DMF members and more broadly within industry as well, and also a contingency around needing to get to be able to reinsurance or top up insurance to cover the gap that may potentially arise. So I think it's the work that we did back a few years ago sort of reflected into that particular sector that it may potentially be a suitable option in the absence of a fully functioning market where insurance was actually accessible and affordable. But I would note that, as my predecessor noted in the report, that it's not a perfect solution, and it's not a perfect solution for either the business or the consumers or customers who may at some point unfortunately end up in a position needing to avail themselves of that protection mechanism as well. But there's no question about what we hear from right across the board, across all sectors, is around the cost and the accessibility of insurance being a real issue for our small businesses, and clearly in particular sectors where there is a greater potential for higher value claims. Either there has been some incidents, so that's one of the challenges.
Sorry to cut you off. We've just got a certain amount of time.
That's okay,
but it's the case, isn't it, that when we're looking at something like the amusement, leisure and recreation segment of business, if you like, or of economic activity, what are the other options? I mean, there's barely any other options at the moment. They've got, I think they've got one provider of insurance, but they've run out of options, haven't they? So if you can't provide the insurance, they're not going to operate.
Yes, no, you're correct. You're correct, Senator, and I that's our understanding too. I mean, we haven't gone back to this in a couple of years, but as far as we're aware, there is the one in that sector. There's the one provider of insurance. I know that post us producing our report, the Law Council made a submission raising concerns about the appropriateness of a DMF. But I think one of the things is when you get to a situation where you're looking at a DMF, there's no perfect solution because, as exactly as you said, that there's a scenario where other options are not available, and then there's alternatives need to be considered.
Well, and the Law Council can make a submission. I'm a lawyer, and I put a lot of credence on submissions made by the Law Council, but if the activity is not going to occur unless you can get the insurance, it's a moot submission in a way because they'll just close down and they won't provide the service. So I'm interested to know what has happened. That report was made in 2023. What's happened? Has it just fallen into a black hole, or what's happened?
So what I understand, Senator, and this was before my own appointment, is that the report was provided to government for a decision, and in conjunction with advocacy from Espefio and also on behalf of the Australian Amusement, Leisure and Recreation Centre. And I understand that the then Assistant Treasurer and Minister for Financial Services wrote to, made a decision, I think it was in late 2022 or early 2023, advising that the government had made the decision not to provide funding for a DMS, and flagging that they were open to considering alternative options to address these ideas and solutions, and the government requested further information and work from the association around what, if any, obstacles might be impeding any risk mitigation work, whether there were barriers to insurers recognising the good risk management processes that members might be putting in place, and how the government might be able to assist in addressing those obstacles.
Sorry to interrupt. But so what's happened? So what's the latest? Where's the?
So with respect to where the association is up to in those conversations with the government, I'm not aware of that, Senator. But from my understanding, the government has made a decision not to provide the funding.
But is that something? But is that something you should be working closely with the? I mean, you've done this. Your office, if I can put it that way, predecessor has done this body of work. The government says, well, we're not minded to fund this initiative, but we're opening to consider other options, or please talk to us. You don't have a watching brief on this, or you're not continuing to do the work so we get a solution to this? Because the reason I'm a bit exasperated is we were in Brisbane just a few months ago for a hearing, and the issue's still there. There's all this work that's being done, but we're no closer to a solution.
Senator, sort of in terms of, since I started in mid-March, and one of the things that the team eagerly will keen to obviously participate today, but in terms of what the next steps are, would be, eagerly awaiting the result of your inquiry, because I think that's an important next step in terms of the comprehensive scan and investigation that you're doing across the country. So once we have that, once we have the report from the Joint Committee, we would be very eager to consider how we can assist. We have, in the meantime, Senator, been working more broadly across, because it's not only this sector that's challenged.
Oh, we've heard. I can tell you, we've heard from in Melbourne tomorrow. We're going to hear from the live entertainment sector, who are at their wits' end, and there's hundreds and hundreds of venues have closed because they can't get insurance. We heard from the caravan industry in our home state of Queensland. When I say our, I'm including the Honourable Scotty Buckholtz in that, who tell us that there are caravan park owners in their 90s who can't sell and retire because purchasers can't get insurance for caravan parks. We've just heard from the Hotels Association here that there are publicans of a similar age who are trying to retire, but purchasers can't get insurance. So clearly there's market failure, and clearly no solution's going to be perfect, but unless there's a solution, businesses are going to close, people are going to lose their jobs, and communities are going to potentially lose culturally significant services. Do you acknowledge that?
I would, Senator, absolutely, and it touches pretty much every sector, and even for where sectors can, in theory, get the insurance, that the increased cost of being able to service that insurance. So, because we not only talk to small businesses where they can't get insurance, but as I've sort of said in the opening comments, that because of the costs attached, they are in fact under-insuring, which won't cover their costs in the event that something actually happens. And there's a range of other issues in terms of it's obviously not only physical insurance, so to speak, or business interruption insurance, but it goes to cyber security as well. So I would be we remain very keen to assist and work and advocate for all our small businesses in terms of the insurance challenges that they are grappling with. And I know from, in addition to businesses, what I'm hearing, I live in Victoria, and I hear from, in my previous role as the Victorian Small Business Commissioner, I would hear from small businesses who were located adjacent to tobacco shops, legitimate tobacco shops or otherwise, but just even adjacent to tobacco shops or in a high street that is near a tobacco shop, getting to the point where either the insurance premiums were so high they couldn't afford it or that they simply weren't able to secure it as well. So you would not get any disagreement from me, Senator, that insurance accessibility and affordability for our small businesses is an issue.
I just a last comment, and perhaps a combination of a question and a comment. It does concern me a little that certainly the way, and maybe you can take this on notice and provide us some further comments in relation to the discretionary mutual funds, because this option has been raised by a number of parties, potentially also including the provision of some seed capital from Commonwealth state governments, which might be repayable, as providing some sort of pathway, especially where there's been market failure and there does not seem to be a way to address that market failure. And we're going to Melbourne tomorrow, and we've heard from live entertainment venues in your home state of Victoria that they're just closing up shop because no one who serves alcohol after midnight and has a dance floor can stay open and get insurance at a reasonable rate. So they're just shutting up shop. So do you recognise that we need to really think potentially outside the box to try and get solutions here? They may not be perfect, but unless we get these solutions, we're going to potentially lose businesses that are really significant for Australia.
I welcome any creative ideas and solutions that people will have, and as you've said, it's not perfect, but if there are creative ways that we can collectively think about ways that we can allow our small businesses to continue to be able to operate. One of the challenges we also see going back to the insurance industry is small businesses who are actually taking really active steps to try and manage their risks as best they can, that they're not necessarily getting the traction with the insurers on that, or that they don't have clarity.
The problem, Ombudsman, is the insurance companies don't want to be in that sector of the market at all. I mean, the price signal they're giving, for example, live entertainment, they don't care if you're serving alcohol in plastic cups. They don't care if you've got your own well-trained security staff. They don't care if you've got a absolute perfect record with respecting making no claims. They don't want to be in the market at all. So if you've got that issue, it's not about demonstrating to the insurer you've taken mitigation steps. There has to be some other solution, because the private insurance market, they don't want to be in it. Do you recognise that issue?
Well, I'd share with you a very similar circumstance. We heard from a regional South Australian tourism operator, this is last year, who was offering quad bike tours, and they've been operating for 11 years, and they've safely hosted around 50,000 customers without one single insurance claim. And despite this, very strong safety record by anybody's measure, the operator was reporting significant difficulty even securing public liability insurance, and was expressed to my team at the time was that without the appropriate and affordable cover, they'd be unable to continue operating. So I welcome any creative solutions, partial or otherwise, that we can consider in this space.
And I think the feeling's mutual. Thank you. Thank you, Chair.
Excellent.
Thank you. Just on the back of questioning by Senator Scarr, could I ask you to review the opening statement of the AHA today, which talked about some structural response to the lack of access that currently prevails. And can I just clarify, in your role as an ombudsman, how critical is your role as advancing policy solutions in addition to sharing information with people across a range of sectors?
Thank you, Chair. I'll definitely take that sphere of looking at the AHA's opening statement. We've got a critical role in not only identifying what the issues are and sharing the business intelligence that we do, but also in terms of considering what the potential solutions might be to the problems.
Okay.
We've got a responsibility to advocate. We're not the policy, we don't hold the policy pen within the Commonwealth, if you like, but we are certainly a key part of our role is coming up with ideas and solutions for policy designers to think about and test.
So could you check in your communications if you have provided any policy advice to fix this hole in the market? And if you have not done so, could I ask you to prepare, based on the extensive evidence that you have received through your insight as an ombudsperson, what a policy solution to the problems that you've identified might be? I'll go now to Mr Moncrief. Thank you.
Thank you, Chair. I just wanted to go to in your submission you talked about that more work needs to be done to increase the utilisation of the professional standards scheme. Could I ask what would you think that would look like, that improvement of utilisation, and what sectors do you think would most benefit from that?
I'll hand over to Mr Storer at this point.
Yep.
Thank you, Linda, and thank you, Chair. So as you would have seen in the submission that we made back in March, it certainly touched on one way to potentially put some downward pressure on costs of insurance and availability would be where those professional standards schemes exist to improve the utilisation. Certainly one area where we're hearing that there aren't quite the same pressures as there are across some other sectors is in financial services, where there are certainly some professional standards that apply. So really, and the point we were making in the submission was that where there are frameworks, often it's not well understood that they exist. So really making sure that where those standard schemes are there, that it's better understood and utilised within those sectors, which can add that sort of downward pressure on insurance prices.
Yeah, for sure. But I suppose my question is, how would you see that being more well understood? Like how can we do better and make sure that more people know about it and what it looks like?
Look, this is something that we haven't sort of deeply looked into it, but again, raising awareness, and we see this a lot across the small business sector, is understanding where arrangements are currently in place. That could potentially also be having conversations with the insurance sector to really understand, and certainly we've made points in other parts of our submission around having, whether it's government, industry representative bodies and the insurance sector getting together to understand where those real risks are and where there can potentially be certainly better understanding within insurance pricing where arrangements can actually lower those risks. So I certainly think in that space it's probably opportunities for different stakeholders, relevant stakeholders in those sectors where professional standard schemes apply, to really understand what the opportunities there are.
Okay, right. And your submission also suggested that there were some burdens and compliance obligations related to the scheme, and obviously there's different burdens, different obligations for different areas. But do you have any common themes or common barriers that you think could be streamlined?
Look, I think in terms of that particular question, I'd probably have to take that on notice.
Sure.
And come back to you on that.
Yeah, great. Thank you.
Thanks,
Jeff.
Just to take us home, we've got Ms Lawrence.
Thanks very much for your time and for your submission to the hearing. I'm just wondering whether you collect data on the percentage of claims that are denied by small business?
No, we don't have access to that information, no. I think I would expect that would be held by the individual insurance companies, but we don't have access to that data.
And I just want to drill into cyber insurance policies. That you mentioned it in your submission as well as an area where there's perhaps an increasing need, and certainly looking at some of the data, I think some 46% of small businesses are targeted, of businesses that are targeted for cyber attacks, be it ransom, phishing exercises and so forth, 46% are small business. I think one of the Australian government cyber agencies, the Australian Cyber Security Centre, identified from their survey that small business spend less than $500 on cyber security measures. And I just think we've heard so much today about, in different contexts, admittedly, about the lack of insurance literacy and understanding what the policy actually covers for a business. And my understanding for cyber is 1 in 3 claims are denied, and 80% of those denials is because their multi-factor authentication is not fully deployed. So if just one employee disables multi-factor authentication, it voids the policy. And that's just one example, like if their patches aren't up to date or whatever. So for a small business that's particularly exposed to cyber crime, and this increasing cost of insurance pressures on business, what you're seeing in that space, because clearly there's an identified need, but it doesn't seem like small business are best positioned to know what product they need, but then how they're going to put in place mitigation measures so their premiums are actually affordable. So just wondering if you've got any data in response to that, because you did point out the cyber policy in your...
We wouldn't have specific data, so to speak, no. So what we've reflected in the submission reflects what we would hear from our general engagements with small business, but we wouldn't hold any data that actually, and I'm happy to take on notice to triple check that with the team, but my understanding is we wouldn't have any data around the specific cyber claims or issues in terms of as you've articulated, but really I'm very happy to obviously take it on notice and see if there's some further granular information we can provide around that.
That would be
it is an
because
ongoing challenge.
Yeah, especially because we've heard from the Insurance Council that cyber insurance is like a growing sector of need, and that there is under insurance of that product class. And I'm just trying to get not even a crystal ball, because I think it's here and now, but just about the impact that will, add to small business, but equally ensuring that they are fully aware of the risks and their exposure in the absence of it. But then if they do secure it, that it actually is not just junk insurance, that it'll actually deliver a product for them and a claim would be paid out. But yeah, so it's clearly a growing need compared to 10 years ago, even perhaps 5 years ago. So yeah, any additional details that you can provide in support of what you've identified on that front would be great.
Yes, of course.
Thank you. Thanks, Chair.
Thank you very much. You have received some questions on notice. If you could possibly return those to the committee by Monday, the 17th of August, that would be much appreciated. Thank you for taking time to give us the evidence today. Indeed, thank you to all our witnesses here in Perth. That concludes today's hearing. Thank you to those who appeared, to our Hansard and broadcasting support staff for their assistance, and can we thank our Secretariat for their hard work in not just travelling here but preparing for today's hearing and supporting us in our work. The committee stands adjourned.
Well done, Chair.
Thank you, Chair. Thank you.